Hello everyone. Hope you all are doing well. My name is Meet Panchal and I am a tutor and instructor, you would call me rather, for the Indian Institute of Commerce, Lakshya, for taxation and also for financial reporting. Today, we are going to actually start with our taxation YT mastery classes, that is YouTube mastery classes, volume 2, wherein we are going to understand the basics of taxation, the basic income tax computation. Later, we are going to also understand how is the corporation tax for a company calculated and what is the loss relief that is available for an individual and also for a company, right? So, in this section, we are going to mainly focus on these three chapters. These are not just three chapters, it is like the basics that we are going to understand, which would cover for basic income tax computation. We would cover chapter number 2 and 3, that is investment income, and also how to calculate the basic tax liability of an individual. We're going to also calculate the tax liability that a company has to pay through the corporation tax chapter, and also the loss relief that is available for an individual, also for a company. So companies and individuals who do business, who do trading, right? They actually incur certain losses in a couple of years. They might actually also have certain profits in a couple of years. So when they have a profit, for that profit, the tax is to be charged on the company, right? Because the company is a resident in UK, the company is incorporated in UK, and the company is generating profits by doing business in UK, right? So for that, the companies have to pay a certain amount of their income as a taxation to the government, that is HMRC in UK. So on the profit, they actually charge tax, and as you're generating income in UK, you have to pay tax. But if there is a loss, also you get a relief for the loss from the UK HMRC, and how you will get the loss relief, how your taxable income will be paid for the tax liability, how to compute the tax liability, all those basics we are going to understand, after which we're going to solve some full-fledged sums from your past examinations and eventually lined up to a mock paper, which we'll do in the last class. So, in today's class, we are going to cover the introduction to taxation system and also our basic tax computation. Tomorrow, the class will be on the same time, wherein we are going to cover corporation tax and also the loss relief available for a company and for an individual. Then in the next week when we meet again, at that time we are going to solve certain important section C questions. And on the next day, that means during the weekend, Saturday we are going to cover in the next week certain section C questions. And Sunday in the next week we are going to cover our full-fledged mock paper. So you will have an understanding start to end that what is the importance for a taxation system and how you're going to prepare for your examination. As I do consider that most of the students would be worried because now we are, a little bit closer to our examination dates because our taxation would be examined like around 20 days later. So guys, is the reason why Lakshya provides you this YT mastery classes wherein whatever are your doubts, whatever are your difficulties, your areas of, where you find it complex. So we are going to help you dealing with it. Please go through the whole session, and if you have any doubts in the YouTube, you can directly ask me on the comment section. I will be able to reply you directly through the comment section. So let's get started with our YT Mastery classes, Volume 2, only from IIC Lakshya. Okay, guys. So firstly, I'll just introduce myself as I've already introduced it, but I'll just give a brief introduction that my name is Meet Panchal and I'm a trainer at Lakshya for financial reporting and for taxation. And here we are going to cover taxation, wherein the syllabus of this, or you can say the gamut of this YT revision volume 2 for taxation, it is going to be covering your basic income tax computation, your corporation tax, as I already told you, the loss relief available for an individual and for a company, certain section C questions, because obviously section C questions are are of much importance for the students. Section A and section B students can deal with it, right? If in case they don't know any answer, they would actually, try to get it by fluke. But what about section C? If you don't know the answer, you lose the marks, right? And one question would be of 10 marks, the other one would be of 15 marks, probably one would be given for 5 marks, and so on. So technically in section C, students usually have problems and students usually face the difficult section to be section C. And is the reason why we are going to also mainly focus on our section C questions so that when you are in the examination, no matter how difficult your section A, B or C is, you're going to be able to deal with it. Okay. Lastly, our intention would be to make you understand and give you familiarity with a mock paper of UK tax so that you'll understand that how the mock paper looks like, and we are going to do it directly to the CB platform, which is a platform available of where you have to give your examination. Also during the day of examination you will be given the same platform, so if we do it in prior we'll understand and we'll be familiar with the interface of this platform. So is the reason why we're going to mainly be dealing with the mock also, and that will be in the last class, that is on Sunday next week. Okay. The timings for the English batch will be same, 9 a.m. to 1 p.m. this Saturday, Sunday and the next Saturday, Sunday. This Saturday, Sunday we are going to be focusing on the chapters, and the next Saturday, Saturday we are going to do section C questions, and Sunday we'll be solving a full-fledged mock paper. Okay. So I hope the basics and what this gamut will cover is clear to everyone. Now let's get started with the first chapter, that is the UK tax system, chapter number 1. So the UK tax system firstly is actually monitored, or you can say established also, by HMRC, and it is mainly governed by HMRC, that is Her Majesty's Revenue and Customs. Okay. So the UK tax system, why is it established? As an individual, I am actually living in UK. I am taking advantages of the securities of the roads I'm taking advantages of the securities, the roads that are available to me, right? Because I drive from here to there. Obviously, it takes time for the government, it takes time for the country to construct it, right? For the bridges, for the buildings and everything. So I'm enjoying all those benefits in the country. So the country says in return, you're also generating certain income, right? If I'm doing certain trading, if I'm doing certain business, I'm also generating certain income, and all those facilities the government, the country provides me. So the country asks me to contribute a certain amount of my income in the form of tax, right? So the tax system is used mainly for the economic purposes so that the government have sufficient amount of money to spend on their activities like, construction or any sort of, security that is being provided to you, anything, right? So technically, you can say that some part of your income you're supposed to contribute in the form of tax for the social welfare and the well-being of the country. So this is why mainly our UK tax system is made. So let us get started with what is there in it. What is the purpose of taxation? I've already told you. Firstly, there is an economic purpose so that government shall have enough amount of money for spending by the government and its impact on the economy of a country as a whole, right? So what will be the impact of taxation on the economy of a country as a whole? That when you collect certain money, it is also that, from the high income individuals who are earning a lot, from them, higher amount of taxes, taken. From the lower income group, not too much tax is taken. Maybe they also get certain concessions, right? So is the reason why there is a very good distribution of wealth throughout the country also. So that is also a main reason for the UK tax system. And secondly, it is to influence the economic factors such as inflation, right? So in order to ensure that there is no inflation within the country too much, which might make too many things too expensive for individuals to deal with. Employment levels, so that individuals get sufficient employment opportunities because the government will have a lot of money. The government will construct bridges, so the government will hire laborers and people will be employed, right? And exports and imports, so that government have sufficient amount of control over the exports and also over the imports. If in case the country of UK it is importing too much, so that means too much of amount they are actually reliable upon some other country, right? Because they are taking too much from some other country. So to ensure that the export does not or the import does not exceed a particular limit, they have a UK tax system, right? So on your exports you charge certain tax, or on your imports also you charge certain tax to ensure that the import and export are well managed and not ill managed. They have a UK tax system. Okay, then what is the other purpose of taxation? To influence behavior of individuals and the business. So obviously the current UK tax system, okay, ignore this part guys. Let's read this first. To influence the behavior of businesses and individuals. Now, how does the UK tax system influence the behavior? Maybe an individual is earning £100 in UK. Okay. If that individual is taxed, maybe say 60% on it, right? For earning that $100, okay, I'll redo this. Yeah. For earning that $100, maybe that individual is incurring $30 or £30, right? That individual is incurring £30 and the tax that is charged on his income. I'm so sorry, guys. Yeah. The tax that is charged on his $100 worth of income is maybe say £45. So the individual, after paying the expenses that he has incurred for doing the business, so sorry, guys. Yeah, the expenses that he has incurred for doing the business, the expenses that he has incurred for paying the tax. After that, what is left in his pocket? It is just £25, right? So the individual says that, I'm earning £100, but I'm just keeping one fourth for myself, right? Because £30 is the expenses that I'm incurring and £45 is the tax that I'm paying. So it is a lot of tax burden on me. Why should I continue to do business if I'm earning £100 but receiving only £25 in my pocket, right? So is the reason why the tax should be not a burden to the individuals. Okay. The tax should not be a burden to the individuals or it should not be a burden to the taxpayer. That should be ensured. Otherwise, they will not continue to trade or they will not continue to work and generate certain income. Right. The individuals also have to take care of their own liabilities. Correct. So the individual cannot just keep on paying too much of tax and not having anything in his pocket. Correct. So it would influence the behavior of businesses and individuals. So if in case the individual is earning £100 and there is a lot of inflation, there is a lot of tax which is charged. So if £60 is his total expenses, then he will only be left with £40. So his behavior will be influenced by the tax, because obviously if he has only £40 left, he would spend less. Correct? He would not buy too much of luxury or anything. Right? But if in case the tax is low, maybe say the tax is £25. So he will be left with £75, correct? So he can make sure that he invests certain somewhere else. He keeps certain deposits so that in the future date when he is not able to earn income, he will be able to take care of himself after the age of 70 or something. So he can utilize his money in various sources, right? So is the reason why it affects the behavior of an individual, that what the individual spends in according to the amount of tax that he has been charged. Now the UK's tax system encourages and also discourages. It encourages means that it gives tax concessions, or you can say tax-free incomes. If it discourages something, it charges higher tax, or you can say additional tax. Now, what is the UK system encouraging? They are encouraging the use of individual savings account, right? So you would actually invest in your savings so that to ensure that in the future date you have sufficient amount of money with you. Charitable donations, if you're making any charitable donations, UK promotes it, right? So technically, if you're using, maybe my income is 1 lakh pounds. From that, I'm contributing something into my savings. Maybe say I'm contributing 20,000 into my savings. So that is also a part of my income that I'm taking to savings, correct? But that will be a tax-free income that I'm taking to savings, because obviously every person, every individual needs a certain amount which is to be saved, and the government cannot keep on charging tax on everything, right? Second one, charitable donations. Charitable donations like gift aids, if I'm making any charity. So maybe say from this 1 lakh pounds, £5,000 I have contributed as a charity, right? So that means it is for a good cause. It is for maybe for the children who are not having parents or anything, or for in the rural areas where people are poor, right? So if they are making any charity for them, like for any educational systems or anything, so it is for a good cause. So the government would not charge tax on this for you. Okay. And lastly, any entrepreneurs and investors, they would actually encourage the entrepreneurs and investors to actually for the investors to purchase more shares, maybe, or for the entrepreneurs to actually start up new businesses. So they have many sort of reliefs which are provided to the entrepreneurs at the start date, so that they can initiate their business, and obviously their less tax or maybe none of the tax will be charged depending on the income of the individual, right? So the UK tax system encourages all this. What does the UK tax system discourage? Motoring. If in case I'm using a lot of fuel, it is hazardous to the environment, right? It is hazardous to the environment. So is the reason why the government would discourage it, that if you're purchasing fuel for your motor car or something, then obviously you have to pay tax on it. Okay. Any smoking or alcohol consumption, government discourages it. So government charges additional tax on it. Okay. Environmental pollution, if you're making, like, you're running any factory where your machineries are not environmental friendly, they're causing a lot of pollution. So on that, you will have to pay additional tax. Okay, because obviously the government discourages such activities. Here, investors would be if in case, there is a company, or maybe, there is a hotel. I'm purchasing certain shares in that company, and the company is actually manufacturing electric cars. So by purchasing their shares, I'm actually, encouraging the use of electric cars to ensure that the company actually, in the future date is, being developed. Okay, so that they can produce more cars, they can manufacture more cars, and more electric cars are being used. So the government would say that, okay, you're actually investing your shares in the right place. So we would give you certain concessions there. Hotel, like maybe it is an eco-tel, environmental friendly hotel, right? Wherein everything is reused, recycled as much as possible. Not too much of electricity is used. So if I'm purchasing any shares of a hotel company that is running such hotels, so obviously the government would encourage the purchase of such shares by giving me certain tax concessions or giving me certain benefit on purchasing certain shares. Okay. Now guys, there are one, two, three, four. Four types of tax. Here we are going to do social justice. What do you mean by social justice? Social justice means maybe a person who's earning 1 lakh and a person who's earning 10,000. The tax should be similar for them. The tax should be similar for them. The tax burden for the person earning £10,000 should not be too much, and the tax burden for the person earning 1 lakh pounds should not be too less, right? The HMRC and the tax authorities should ensure that there is social justice for all the taxpayers within UK. And how do you determine that? So that is through four of these taxation processes. You will understand these are different types of tax which are charged depending on the income of the taxpayer. So you can say that, I think it is upon your opinion, you would say that this is good, or you would say this is good, or you would say this is good. So technically, it depends on the individual, but the taxation system which is used by all the countries is progressive taxation. Now, what do you mean by progressive taxation is that, I'll just write it here. What do you mean by progressive taxation, guys? Maybe say I'm earning an income of £50,000. So I will be charged 20% tax on it. Okay, just taking estimates. Okay, just taking random amounts. I will be charged 20% tax. But for an individual who's earning higher than me, that is 1 lakh pounds, for them maybe it is 40% tax. Okay. So this is known as progressive taxation. That means as the income of the individual increases, the percentage of tax applicable on them also increases, and the UK tax system uses this progressive taxation. Okay, so technically these are not the actual values how it is taxed. I'm just saying that the percentage of tax increases as your income also increases. That is known as progressive taxation. Okay, then comes regressive taxation. Regressive taxation means nothing but your percentage of tax decreases as your income increases. Like maybe any petrol that you've bought, right? I am an employee of a company who's a mere analyst, or I've just started doing my work. So I'm just a mere employee, and there is a manager. We both have a car, okay? And for that motor car, we are purchasing private fuel, okay? So we have purchased 10,000 liters of private fuel, which will cost us maybe say 10,000 pounds, okay? For the whole year, we have actually purchased 10,000 pounds of private fuel. And on that private fuel, 1,000 pounds of tax is charged, okay? 1,000 pounds of tax is charged. Maybe say the employee's income annually is only 20,000 pounds, right? So the employee from his 20,000 pounds, he is paying 1,000 pounds for the tax on the private fuel that he has purchased. That means technically the employee is paying 1,000 divided by 20,000 into 100, that is 5%. So technically the employee from his total income of 20,000 is paying 1,000 pounds as tax on the private fuel that he is purchasing. That means 5% of his income, it is actually taxed under the private fuel, right? But for a manager, his income would be higher than me. Maybe his income is actually 50,000 pounds, right? And he is also purchasing private fuel of 10,000 pounds. So he is also paying 1,000 pounds worth of tax on it. So that means how much of his income is taxed for the private fuel? It will be 1,000 divided by 50,000 pounds into 100%. That will give him 2%. So that means you can see this is an example of regressive taxation wherein the amount of tax is same. Okay, the amount of tax is only 1,000 pounds, but because the manager has an higher income, that doesn't mean the proportion of tax has increased, it remains the same. So technically, for an employee, he's paying 5% of his income as tax, but for as manager, he's only paying 2% of his income as tax, right? So this is known as regressive taxation, okay, where your income is rising, but the percentage of tax burden is still the same. So technically, comparatively, proportionately, the taxation is reducing. Okay. I hope this is clear, guys. This is known as regressive taxation, and none of the companies use it. Is the reason why this is the only example that we could consider for it. There would be also certain examples where the amount of tax is fixed. Okay. Proportional taxation. What is proportional taxation? That may be there is an individual, there is an employee, and there is a manager. Okay. Employee is earning 20,000 pounds. Manager is earning 45,000 pounds. For both of them, the same amount of tax is charged, that is 30%. So 20,000 into 30%, employee is paying 6,000 pounds and the manager is paying 45,000 into 30%, that is 13,500 pounds. Okay. So that means the tax is proportional. It is just 30% irrespective of your level of income, right? So technically, guys, here it is just a proportion of that amount is taken, that is 30% is taken from the employee and also from the manager. Okay. So that means the percentage is fixed. In the previous one, the amount was fixed. That means in the regressive taxation, the amount of tax is fixed, but here the proportion of tax is fixed. Okay. The amounts were different. For the employee, it was just 6,000. For the manager, it was 13,500. Correct? So that is known as proportional taxation. As income rises, the proportion of tax remains constant. That means no matter what your income is, you will be charged 30% tax only. Okay? Then the last one is ad valorem principle. What is ad valorem principle? Ad valorem principle is about VAT. Okay? Maybe say there is a manufacturer who is actually producing sodies. or you can say, what do you call it, pops, right? Now, the manufacturer produces them, but the manufacturer will sell it to the wholesaler, and then the wholesaler will sell it to the retailer, and lastly, the retailer will sell it to the customer, correct? This is how the hierarchy goes, right? So now, eventually, these SODs are manufactured by the manufacturer, but they are eventually going to be consumed by the customer. That means the benefits of these SODs are going to be enjoyed by the customer. So technically, when the manufacturer sells it to the wholesaler, maybe say the value of these SODs is 100 pounds. So, or if in case there is 10% tax on it, so technically the wholesaler will pay 100 pounds to the manufacturer for the sale, and 10 pounds, that is 10% of it, which is 10 pounds, to the manufacturer. That means the manufacturer collects the amount of tax from the wholesaler. Okay. The manufacturer collects the amount of tax from the wholesaler and then gives it to HMRC. Right. So technically, eventually the customer is going to bear the consequences, because the customer has to take the burden of tax because he's enjoying the benefit, he's drinking that, correct? So technically, this is known as VAT. So whenever you see any product you purchase, there is already that is already a tax inclusive product. So that means technically whoever is selling it, they are selling it at their price and also collecting the amount of tax from you that they have to pay to the government or to the taxable authorities. Okay, that is known as ad valorem principle. Lastly, yes, social justice, I don't think I need to go through. Okay, you can ignore this as of now. I've already explained you each one of them in detail. Okay. Now we understand the types of taxes, guys. That what are the types of taxes? That is, firstly is the income tax. What is an income tax? I'm generating I'm generating certain income, and on that income I will be taxed. It could be if I'm working, right? So I'm generating employment income. So that employment income will be taxed. If maybe I'm actually not working, maybe I'm doing some trading. So I would have certain trading income, but I'm not trading as a company. Okay, I'm just doing a business for an unincorporated company, right? I'm just doing my own business. Like maybe I'm posting certain taxation videos on YouTube and generating certain income from that, right? So technically that is my income as an individual, not as a company. So that is my trading income. Not technically trading income, but yes, I'm actually providing certain facilities and charging in return for the same, right? So maybe I'm doing certain sales and purchase of goods and commodities in my trading. Obviously, I'm not a company. I'm just one person who's doing the trading, right? So I will be having a trading income and that will be taxed there. Okay. If in case I'm investing my amount certain somewhere, okay, and actually receiving the interest income, right? Maybe I've purchased certain bonds or shares or anything, or maybe I've kept my amount in fixed deposits on which I'm receiving interest every year. So that is my interest income. That will be taxed. Then the next part comes national insurance contributions. What are national insurance contributions, guys? These are nothing but contribution which is made towards the social welfare and well-being of the country. Okay. So whatever is your total income, according to that, you'll have to contribute a certain amount towards the national insurance contributions. And that will technically be different for an employee and for a self-employed person. Okay. So, self-employed person is nothing but if I'm working for myself, I'm not working for anyone else, right? But I'm not even a company, right? So maybe I'm doing certain YouTube videos from where I'm generating income, or maybe I'm doing certain trading activities. It is my own factory that I'm running, but obviously I'm not a company which is incorporated. So I'm a self-employed person. I can generate my income through my vocations. Okay. So I am an employee. So then in that case, I will contribute a certain amount, maybe say 2.5% of my salary. I will contribute towards the national insurance contributions. But if I am an employee, the employer will also contribute some amount from my behalf. Okay. On my behalf, the employer will also contribute, and maybe say he contributes 3% of my income as a national insurance contributions. So some amount is contributed by the employee, some amount by the employer in case of an employed person. If in case of a self-employed person, technically he will pay certain amount of national insurance contributions depending on his level of income. Okay, so there will be class 2 and class 4 NICs that he will have to pay, that you will understand through national insurance contributions chapter. Okay, then comes the next part, which is capital gains tax. Okay guys, what is capital gains tax? Maybe I had a building. Okay, that building had a cost of 1 lakh pounds. I sold that building for 2 lakh pounds. That means on its sale, I got a profit of 2 lakh minus 1 lakh, that is 1 lakh pounds. Correct? The building had a cost of 1 lakh, but I sold it for 2 lakh. That means I generated certain profit on its disposal, on its sale. Correct? So when I sold it, I generated this income of 1 lakh pounds, and is the reason why I will be charging tax on it. For an individual, the tax will be charged as capital gains tax, right? So on the sale of my capital, I'm receiving certain gains, and on those gains, I'm paying tax. So it is simply known as capital gains tax. This is mainly for an individual, also for companies, but technically for the companies, the capital gains tax is not charged separately. They are charged in the corporation tax only, that you'll understand later on once we come across for the corporation tax chapter in the next class. Okay. Then there is inheritance tax. What is inheritance tax? Maybe my father was there. Okay. My father had a couple of shares in different companies. My father had real estates, right? My father had any, properties which are just vacant. They are just vacant. They are just held probably for the capital appreciation. All these things my father had. Now my father died. Okay. So that means I am his son. So I will get all this. Being his son, I will get all of this. Correct? So that means I have received all of this directly from my father. So that is, I have inherited all of this. And on that, I will have to pay certain inheritance tax. What are the consequences and how the tax rules are applied, that you can understand in the chapter inheritance tax. Okay. Then comes corporation tax. What is corporation tax? Corporation tax is nothing but the tax paid by a company. Okay, the tax which is paid by a company, that is known as corporation tax. It is actually 19% fixed tax rate which is charged on the company's profit for the year. Okay, and lastly, the value added tax, guys. What is value added tax? Shortly known as VAT. Whenever I purchase certain commodities as a consumer, okay, there is a retailer, I am the consumer. Retailers want to sell that commodity at 100 pounds to me. Okay, but there is also tax charge of 10%. So the retailer says that eventually I am going to consume the total product that I've purchased. Correct? So technically the tax burden should, as a consumer, fall upon me. Right? So the retailer, 10 pounds of 10% of 100 pounds is nothing but 10 pounds. Correct? 10% of 100 pounds is nothing but 10 pounds. So as a consumer, I will pay the retailer 100 pounds for the sale and 10 pounds also for the tax, right? So technically the retailer collects from me the amount of tax, and then retailer gives it to HMRC, right? Retailer gives it to HMRC. Okay, this is known as value added tax. So as I told you, whenever you purchase goods, they are tax inclusive. That means you've already contributed the amount of tax when you purchase such goods. Okay, always remember guys, all these that you saw from first to the fifth, all these are direct tax. That means I'm generating income. I'm generating income. On that, I'm paying income tax, national insurance contributions, my capital gains, my inheritance tax, my corporation tax as a company. Right? Corporation tax, guys, always remember, is only charged to a company. So all these are my direct incomes that I'm generating, and directly I'm paying tax on it to HMRC, right? That means to the taxable authority. On all these incomes, I'm directly paying the amount to HMRC. Okay. So these are known as direct taxation. Okay. Whereas value added tax is nothing but I'm not paying directly to the HMRC as a consumer. As I told you, the retailer is collecting from me the amount of tax, right? The retailer is collecting from me the amount of tax and then giving it to HMRC on my behalf. So that means indirectly I'm paying it to HMRC. So this is known as indirect tax. Okay. So the first five was direct tax on my incomes. Whatever is the tax liability, I'm directly paying to HMRC. And value added tax is nothing but the indirect tax. I'm not directly paying to HMRC, but indirectly it is going to HMRC. Okay. So as I told you, direct taxation, it is the taxpayer pays direct tax directly to HMRC, right? All these examples, I think we can ignore it because I've already explained you what it is. And indirect tax is your VAT, as I told you. I'm not directly paying it to HMRC, but indirectly the retailer pays to HMRC on my behalf because he has collected the amount of tax on the sale from me. Okay. Okay. Now we'll understand a little bit about HMRC. So what is HMRC? It is nothing but Her Majesty's Revenue and Customs. Revenue and Customs, right? Her Majesty's Revenue and Customs. Now what is this? This is a authority which actually provides you for the tax rules, that how the tax legislation works on your incomes, how will you be taxed, right? So you have to correctly head your income. That maybe if I'm doing certain work as an employee, so it will be in the employment income. If I'm doing certain work but not as an employee, so maybe it is certain trading income that I'm generating. If I'm receiving certain interest from a bank deposit, so that means I'm generating interest income. So accordingly, those incomes shall be allocated shall be attributed to their particular heads. Okay. So those things and how the corporation tax, how the income tax of an individual, how they are calculated, what are the tax legislations which are applicable, how the adherence should be there to it, return, filing the tax return and everything. All that is governed by HMRC in UK. Okay. So the purpose of HMRC is to fund the UK's public services. That means whatever are the public transport available, the bridges and buildings that are available, the security services to the individuals that are available. That means the cops, the police, and everything which is available. So all those are the public services which are provided to the UK residents and also to the people living there in UK. So for that they should need certain funding. Obviously there are bureaucrats, correct? So there are lawyers, there are bureaucrats, there are your police officers. Where do they actually receive their salary from? They receive the salary from you. You pay the tax, and they will receive their salary from it. Okay. Then comes heading up HMRC. So HMRC's tax rules, tax legislation, it is mainly head by the commissioners. Okay. So the people who actually head the HMRC, they are known as commissioners, and the other staff of HMRC, they are known as officers of HMRC. Okay. So they are there to implement the statute law, to oversee the process of UK tax administration, that the import and export is well under control, the taxation burden is not too high on the individuals, the taxation burden is not too less on the individuals, and so on, right? So they actually take into consideration that what is the outgoing and incoming of the cash flows within their UK tax system, right? So that is mainly the commissioners take into consideration. The other officers are also there within HMRC. Those officers mainly are concerned about calculating the tax liability. So maybe say I am an employee, okay, or maybe just a self-employed person. I will just show all my incomes and ask the HMRC officer to calculate the income tax for me. So he will just merely calculate and give it to me. Okay, he will just merely calculate and give it to me. Now here it will be assumed that I have self-assessed. That means if in case I have not stated any income, I have hidden any income. So this doesn't mean the officer will be responsible. I am only responsible for it. The officer is only there to actually calculate and give you the tax liability, not to see that if you have any incomes that you've not stated, and do their professional judgment while calculating everything and assuming everything that where are the incomes coming from and all that. They will not look into all that. HMRC officers will just provide you the service of computing the income tax liability as per the incomes that you've stated. Okay. So guys, also some more things about HMRC I'd like to say. So technically, irrespective of the fact that the HMRC officer is calculating the tax liability or you are calculating it yourself, you are solely liable. It will be considered as if you have self-assessed the income tax liability to be paid. Okay. Now, there are two ways for an individual. An individual can actually pay the tax by filing a paper return, right? That means an offline, giving all the papers, giving all the documents and everything. Individual can file a paper return, or the individual can also file the return through electronic means. To show all of his incomes, he can also file a paper return, or he can just directly show it through electronic means. Mostly electronic means are preferable because it is very easy and it is very friendly to actually identify and find out any papers if in case you file it through electronic means, because it is there, right? Your offline returns, your actual papers that you're giving, that could be destroyed because of certain damage due to fire or any natural calamities. Electronic means it will always be there almost, right? So technically electronic means are preferable by HMRC, but individuals can file their return through paper returns also and through electronic means also, right? For companies, they can file their return not through paper returns but only through online means, that is electronic means. Companies do not have an option to file an offline paper return. They have to do it only through electronic means. Okay. And here companies have to do their tax computation by themselves. They could hire or they could actually outsource the tax officers to calculate the tax liability for them, but they have to do it by themselves. The tax officers will not, the HMRC officers will not do it for them. HMRC officers could only calculate the tax liability for an individual and give it to them. But for the companies, they will not do it. The companies should do it themselves by outsourcing any, other tax professionals who can calculate the tax for them and let them know that what is the tax liability on their incomes. Okay. Always remember that. Okay, guys. Now there are certain sources of tax law that how you can identify that what is the tax law applicable in my situation, right? So for an individual, it would be quite simpler as compared to a company, because companies are dynamic. They have their own particular sources of income. They have their own businesses which are very unique and dynamic because of the ever changing market conditions, right? So technically, it becomes very difficult for them to have a rule everywhere, right? So there are various sources through which you can identify that what are the tax rules and laws which are applicable. So firstly, there is a statute law and there is a case law. Statute law is nothing but which is the actual law, or you can say the legislation adherence to it is mandatory, that it is statutory. Okay, it is mandatory. And the case law is nothing but maybe say there was a case going on because of certain misunderstanding or misinterpretation of a tax law that was there. So the taxpayer understood the tax law in a different way, and maybe he said the tax liability that he owes to HMRC is £100. But HMRC says no, as per this line, we are trying to interpret that the amount of tax that on your income is not £100, it is £150, right? So through this case laws, you can identify that, okay, through this line or through this law, HMRC is trying to say that the tax liability should be computed like this. Okay. So that means through this, the law will be applicable through a real life example also. So those are known as case laws. Then comes statements of practice. Statements of practice are, guys, nothing but there are a lot of statements which are available other than the laws, which gives you an understanding of how the tax law works and how the tax liability is computed. Extra statutory concessions. If in case an employee is there, or if in case I would say rather a trader is there who has just started trading. So he has purchased various number of he has purchased many machines and everything within his company. Okay, he has purchased many machineries and everything within his company recently because he has just started trading. So his total income for the year is 8 lakh pounds. Okay. His total income for the year is 8 lakh pounds. But obviously he purchased a lot this year because he just started trading. So the total expenses for him was maybe 6 lakh 50,000 pounds. And the government says that you have to pay tax on your income. That will be 50,000 pounds. So he is saying that government, HMRC, I've already incurred 6 lakh 50,000 pounds on so many capital expenditures that I've incurred for purchasing so many machines, for purchasing so many assets because I've just started trading. So that means this is a lot of tax burden on me because you're also charging me too much tax here. So technically there is nothing left in my pocket after paying for all of this, right? There is just 1 lakh pounds which is left in my pocket. So government also, if in case there are tax laws which are very strict or very stringent, because of which there is a lot of tax burden on the individual. So separately, the government gives any extra statutory concessions. Okay, they give any extra statutory concessions, and those extra statutory concessions are added to the tax law, or you can say implemented to the tax law. If in case the tax burden the government thinks is too high and this concession should be provided, then they will directly add it to the tax law. Otherwise, if it is not applicable after a period of time, they will remove it. Like the COVID law. So there were certain extra concessions which were provided during the period of COVID because obviously the business activities were not undergoing, right? So technically, during that time they provided extra concessions, but after the COVID period when your business is going great, so the government would remove those COVID related concessions which are provided. Okay. Then internal HMRC manuals. So there are certain internal HMRC manuals which are available. Through those manuals also you can understand the laws separately. Okay. And detailed technical guidance or any sort of technical guidance which be provided by the officers or by the commissioners of HMRC. Right. And lastly, any HMRC website, leaflets and booklets would be available for you to understand. Like this book. Okay. Like this PPT that I'm sharing with you. That is the content that I'm trying to explain you, right? So this is also kind of, you can say, booklets which are available for you to understand the taxation system. Okay. So this is all from which you can identify or understand the tax law. These are all the sources. Okay. I hope this is clear, guys. Okay. Now before this, we'll take a short break of 10 minutes and then return with the latter part of this chapter. This will probably be completed within 20 minutes, next 20 minutes, and we are going to start with the basic tax computation. Okay, guys, I hope we are back from the break. I hope you've enjoyed your short break and let's get started with the remainder of the chapter. Okay. Now, what is interaction of UK and overseas tax systems? It is nothing but taking into consideration double taxation agreement. Now, what is double taxation agreement, guys? Maybe I'm an individual, okay, who is exporting. Okay. I am selling each of my asset or sorry, each of my product in my exports at 100 pounds. So guys, always remember if I am a UK resident, okay, if I am a UK resident, that means I'm staying in UK. So for my UK residency, I will actually be taxed on the incomes that I'm generating in UK and also all my overseas income. Maybe, I'm exporting in Japan, I'm exporting in India, I'm exporting in US. So all these incomes that I'm generating in Japan, in US, in India, and in UK, all these will be taxed. Okay. So technically, if in case I am actually selling certain goods at 100 pounds in maybe say Japan. Okay. So in UK, I'll be taxed on it. Maybe in UK, there is 30% tax on it. And in Japan again, if I'm selling it in Japan, that means I'm generating income by selling it in Japan. So Japan will also say that you're generating income in my country. So you'll have to pay tax on the income that you're generating. And they are also charging 30% tax. Okay. This good that I'm exporting, it costs me 25 pounds to produce this good. Okay. So technically 100 pounds is my sales revenue. 25 pounds I am paying for purchasing this good and making it into a finished product. 30% of 100 pounds I am paying in UK, that is 30 pounds. 30% of 100 pounds I am paying in Japan, that is another 30 pounds. So what is the value left in my pocket? 100 minus 30 minus 30 minus 25. Only 15 pounds are left in my pocket. So I will say that, I am paying tax in Japan also. Mr. UK, I am paying tax in Japan also. So why are you double taxing me? Correct? It is the same income that I'm generating. I'm just selling that one product for 100 pounds and you're taxing me twice on it. I'm being taxed in Japan also and now I'm being taxed on UK also because I'm a UK resident. So that means this is unfair. 60 pounds of my 100 pounds, that means 60% of my total income from the sale of one product, I am giving it in the form of tax. So is the reason why to reduce this tax burden, there are certain agreements which are made between the different countries. So maybe UK would say that, if you are being taxed in Japan on that 100 pounds, if in Japan it is 30% and in UK maybe say it is 40% tax. So UK will say, okay, on the 100 pounds, 30% of it, that means 30 pounds you've been taxed there. Okay. So that means here in UK, 30 pounds you've already taxed. So 30 pounds reduce it and only the remainder 10 pounds you will tax here. Okay. So you can generate income of 60 pounds. So these are certain agreements which are signed between different countries to ensure that the individuals are not double taxed. Right? That means if he is UK resident, so he'll have to pay on his overseas tax also. And obviously, in Japan he is earning income, so in Japan also he will pay tax. So in order to eliminate this double taxation, there is double taxation avoidance agreements that are made between two different countries. Okay, so that is what double taxation agreement is, which is signed between two countries. Such treaties take precedence over the domestic UK law. So always remember, my domestic UK law says that 40% is the tax charged on your income. But just because we have signed a treaty, UK has signed a treaty with Japan, so then this will, the double tax, as per the double taxation agreement, only 10% is charged. So this 10% will take precedence over the 40% UK tax law. Okay. So technically here your tax will only be charged, your income will only be taxed once. Okay. So it could be exempt certain overseas income from UK, from tax in UK, provide any relief where tax is suffered by in two countries on the same income, right? So that is what double taxation agreement is mainly made for. This is not going to be included within your computation of your tax liability, guys, because it is not examined in your UK taxation syllabus. Now, there are two concepts which are quite important. One is tax evasion and the other one is tax avoidance. What is the difference between them? Firstly, we'll understand tax evasion. Maybe I'm actually fraudulently hiding any income, fraudulently not paying any tax, keeping some black money with me, right? I'm not mentioning that I've generated certain income because of my deposits. I'm not mentioning that I'm trading secretly and I'm generating income from there. So technically, I'm hiding something. I'm not showing my incomes to the authorities, taxable authorities, and fraudulently trying to actually eliminate the tax. Right? So that is known as tax evasion, and this is a fraudulent or an illegal activity for which there will be penalties. So technically, as a taxpayer, I will be penalized for committing certain fraudulent activities. That is known as tax evasion, right? So failing to declare any taxable income, submitting false information that maybe my income was £10,000, but I stated it deliberately only of £1,000, right? So deliberately making an error, deliberately providing wrong information, those could be fraudulent activities, and obviously for that I will be penalized. Okay, that is known as tax evasion. Whereas on the other hand, tax avoidance is nothing but taking advantages of or loopholes of the tax legislation. So taking advantages or any sort of loopholes in the tax legislation which is available to me and not too harshly. Okay. So maybe the tax authorities they have said, okay, if your total income is £10,000, 20% of your income you can keep it in your fixed deposits. You can deposit it for your later date usage, and you will not be taxed on it. Okay, so then I will make use of that thing. Okay, that is something which is provided by the tax authorities. So in order to save my income, so in order to save my tax liability, I will actually do this. I will make an investment of 20% into my fixed deposit so that that much amount of my income is not taxed for the year. Okay, it would be for purchasing certain shares, mutual funds, any sort of fixed deposits into the individual savings account that I'm making, or any sort of advantages that I'm taking to actually save my amount of tax. There are many such advantages that you'll also learn in chapter 2 later on. Okay. So that is known as tax avoidance. I hope it is clear, guys. Tax avoidance is not a fraudulent activity. It is just taking an advantage of the loopholes or the benefits which are provided by the taxable authorities to a taxpayer. Whereas tax evasion is a fraudulent activity that is being committed, and for that, as a taxpayer, I will be penalized. Okay. So let us see what these following situations say. Selling a capital asset in May 2022 instead of March 2022. Okay, that means my my tax year starts from, okay, I will give you information about it, which is going to be dealt with in chapter number 2. My tax year, guys, starts from 6th April and ends at 5th April. Right? So technically for this year, my tax year has started from 5th April 2023 and will end, so from 6th April 2023 and will end at 5th April 2024. Okay? It will end at 5th April 2024. So this tax year is known as the year 2023-24. Okay, this is my tax year. It starts from 6th April and ends at 5th April of the next year. Okay. So guys, maybe say 31st March 2024. It falls within the tax year. Okay. I wanted to sell my asset now, but I'm not selling it intentionally. I'm not selling this asset right now. I will sell it in the next year. Okay. In the next tax year, maybe at 31st May 2024. That means in the next year I will be dealing with it because 31st May, sorry, 30th May it will be, right? I'm so sorry. Yeah. So on 30th May, that is after 5th April 2024, correct? So that means if I sell it in the next year, I will be charged tax on it in the next year, correct? So I am just doing a tax evasion. Maybe in the year 2023-24, my income is too high. My income is maybe say 1 lakh pounds. And if I add this capital gain also that I've generated from the sale of my asset, that will increase my income and I will have to pay very high tax because we use proportional tax here, correct? That means higher the income, higher the percentage of tax. So in order to save that higher amount of tax to be paid in this year, I'm intentionally selling it in the next year. So that is just finding a loophole in the tax legislation and trying to just evade the higher additional tax that I'm supposed to pay. So obviously this is known as tax avoidance. Okay, I'm writing it as TA, tax avoidance. Second one, altering a bill of 700 pounds to read 7,000 pounds so that larger tax deduction is claimed on your tax return. Deliberately, the value of that bill is 7,000 pounds. Okay, but you're altering that bill to be 700 pounds. Sorry, it is inverse of that. Okay, the bill is of 700 pounds. Okay, that means my expense is of 700 pounds, but deliberately I am stating it as a wrong amount. That is, my expense is of 7,000 pounds instead of 700. Right, so that is a fraudulent activity which is committed by me in order to save my tax. So the second one will be tax evasion. Right, first one is tax avoidance, second one is tax evasion. Moving funds into individual savings account so that interest can be earned tax free. Obviously, this is tax avoidance because this is an approach or this is a benefit which is provided by the taxable authorities, that some amount of my income, it is saved in my individual savings account, and when it is saved there will be no tax on that. Okay. Okay. Now, as a professional, that is an ACCA, who are known as nothing but tax agents also, right? If you're doing certain taxation activities, I'll just rewrite this. If you're doing certain taxation activities, that means computing tax liability for an individual, you're freelancing it for them, right? You're helping them calculate their tax liability because every individual does not know the tax laws that are applicable for the country, correct? Only we as tax agents or we as ACCAs know it, correct? So, guys, is the reason why tax agents should always have these principles in mind. Okay, these are the 5 principles. You can remember them as PIPCO. Okay, PIPCO, PIPCO. This will help you remember it. Okay, first one is objectivity. Okay, objectivity means I should always be considered about that what activities I'm taking into consideration. What do you mean by objectivity directly? That I should always, follow my rules, follow my ethics, right? While acting as a tax agent, I should not support a taxpayer for committing any fraudulent activities, or if he is committed, I should stop. If he has committed and not listening to me, I should cease to be a tax agent for him, right? So I should be very ethical in my work. Okay, that is known as objectivity. Second one, professional competence and due care. As a tax professional, as a tax agent, everything shall be considered taking into consideration my professional competence and due care, right? That I have to file a tax return within the specified period of time for the taxpayer if I am a tax agent. I should take into consideration, I should always use my professional skepticism and professional judgment to ensure that, show that the taxpayer shows every type of income that that he's having and not hide any income. So I should ask him questions. I should use the knowledge that if there is any income which is hidden, I should try to identify it. Okay, so that is known as professional competence and due care. I should be competent enough in my job and take steps with due care. Okay, then there is professional behavior. My behavior should be professional enough. That means if in case the taxpayer is calculating any tax liability wrongfully, then I should let him know. That is my behavior, to let him know that this is not as per the tax laws. If in case he is not listening to me, I should ensure that I should inform it to HMRC or something. So that is my professional behavior that I'm supposed to always carry with me. Okay. Then comes integrity. Integrity means nothing but acting honestly and being straightforward. not trying to hide or conceal anything. Be honest and be straightforward as a tax agent. Always maintaining confidentiality. Okay. Maybe say there are two employees of a company. Employee 1, employee 2. Okay. Employee 1, I am his tax agent. By using tax avoidance, I have tried to avoid as much of his income as possible, and the remainder he has to pay his tax liability on. So, employee had to pay a very less amount of tax, even though his income was a little bit high because I was a good tax professional. Maybe I tried to avoid a lot of tax for him. So the employee 2 came to me and told me, "Oh, okay, you actually helped employee 1 with a lot of tax savings. Could you also help me with that?" So I'm like, okay. But employee 2 said, "What are the incomes and how did you save?" That is confidential, guys. I cannot share his incomes. I cannot share that how I save the tax for him, what is his expense and everything that I have shown. I have to maintain the secrecy. I have to maintain the confidentiality that I should not share his income with any other employee. Okay. So I should have all these in mind as a professional. Now, dealing with HMRC. So, guys, technically, a member must not assist a client to plan or commit any offense. So, if a taxpayer is trying to commit any offense, any criminal offense, or any sort of fraudulent activity is trying to commit, I shall stop the client from doing so as a tax agent. Okay. Now, they must discuss it with the client and ensure proper disclosure is made. So I should let the client know that, okay, Mr. Client, you're actually trying to fraudulently commit any activities, which is obviously illegal. So for that, you could be penalized. So I will not support you in that. So you should not do it. Okay, that you shall communicate with the client and make it properly disclosed to him. And not declaring income that is taxable. So that means I should know the client, if in case the client is not disclosing any income, I should let him know that, I have found out that you're not disclosing this income, please do so. Okay. Claiming reliefs to which they are not entitled. Maybe say they did not make a donation. Okay. But for that donation, maybe they are claiming a relief. I will say you cannot claim the relief because obviously you've not made a donation. Okay. Not notifying HMRC where they have made a mistake. Okay, if in case they have made a mistake while calculating the tax liability, I'm telling him that you have made a mistake, please notify HMRC. If in case you're not doing so, you will probably be penalized or you will have to be charged or any sort of penalty would be charged on the same. Okay. So, where a client has made an error, okay, it is necessary to decide whether it is a genuine error or a deliberate error or which is a fraudulent act. So, if it is a genuine error, it is by mistake, I should let the client know, he will make the changes. If the client is deliberately doing it, then it is a fraudulent activity. Once the error has been discovered, as a tax member, as a tax agent, or as a tax professional, I should explain to the client the requirement to notify HMRC that this error is there and to correct that error. And should the client refuse to make a prompt disclosure to HMRC, the member must write and explain the potential consequences and consider the amount which is material. Maybe say the client had an income of £10,000, out of which he is hiding £7,000 and he is showing his income only to be £3,000. That means his income is reduced by 70% by doing this fraudulent activity where he is hiding £7,000. Correct? So, guys, technically this is material to his income, right? It is affecting his income a lot and obviously the tax liability accordingly. So, I should notify the client that, you're actually not disclosing some of your incomes, your total income is way higher than £3,000. It is actually £10,000. So you should first explain your client. And if the client still refuses to make that disclosure, the member should cease to act for the client. That means I should cease to be a tax agent for the client. If the client still is refusing to make the complete disclosure, I should stop to act as a tax agent for the client. Must then also write to HMRC that you have ceased. Okay. So technically, I will also write it to HMRC that I am not going to I am not going to be acting as a tax agent from him from this date. I will not mention that he is doing a fraudulent activity or not. That HMRC will then look into it. Okay, I will just tell HMRC, I will notify HMRC that I am no more his tax agent. So for the computation of his tax liability, I will no more be responsible. Okay, because probably he's computing, he is actually committing a fraudulent activity. I will not notify HMRC that he is committing a fraudulent activity, that HMRC will look into it. Okay. Okay, but without disclosing the reason why. As I told you, I will not disclose the reason why I've ceased to be a tax agent for the client. I will just notify HMRC that I've ceased to be a tax agent. Okay, must then consider their position in the money laundering regulations if they are doing any money laundering. Last part of your chapter comes the money laundering section, wherein money laundering is nothing but a term which benefits the taxpayer from concealing the proceeds of a crime. So maybe he's committing a crime, he's not actually showing all his incomes from which he is benefiting. So that is simply known as money laundering. Okay, so there is a money laundering regulations officer which is appointed mostly by all the companies to ensure that the officer looks into the company's incomes and ensures and gives a result that yes, the company is not doing any money laundering activities. Okay, so if the money laundering reporting officer will decide whether the transaction should be reported to the National Crime Agency, so the money laundering officer will look into it. If in case he finds any fraudulent activity, he will report it to the National Crime Agency. Okay, it is upon his discretion whether he wants to report it or not. He will obviously report it, but if it's like a difference of £1 or something, or very less amount, so then he will say that okay, this is just a misstatement here and there. We can ignore it, so I will not report it to the National Crime Agency. Where the report is made, the client should be informed. This may be tipping off, which is an offense. Okay. So guys, where I've already said, okay. So guys, the client is commuting any fraudulent activity. Okay. I got to know about it. So I just ceased to be a tax agent for that client. I notified the HMRC that he is not listening to me. I mean, I notified the HMRC that I've ceased to be a tax agent for it. Okay. So the client says that, the client is commuting a actually committing a fraudulent activity. I tell him that you're actually doing this fraudulent activity, which is wrong. Client says I will not still make a full disclosure, so I will cease to be a tax agent for him and notify HMRC. After notifying HMRC, I will not, the client that HMRC is coming to you for checking the tax liability. Okay, that will be considered as tipping off. Okay, that means I'm suggesting the client that HMRC will come to check. You have to actually save it, right? So the client that is actually doing any fraudulent activity, he'll try more and more to conceal that income that he has hidden. Okay, so technically I'm actually tipping that client off that HMRC is coming. You try to hide it. That is wrong, and that will be not professional for a tax agent. Okay, so he could also be penalized for the same. A report to the NCA does not remove the requirement to disclose the information to HMRC. Right? So eventually the MLRO will have to disclose the report. I mean, he will send the report to HMRC if there are any money laundering activities which are committed by the company. Okay. Okay. Now, when you are checking a recent tax computation from HMRC, you notice that they have made an error. Okay, which has resulted in your client receiving a large payment that should not have been made. What actions will you take? Firstly, I will actually communicate with the client. I will communicate with the client that somehow you're hiding any income or you're not making a full disclosure, because of which there is any mismatch, or you can say a misstatement of the tax liability. If the client still does not listen to me, okay, then in such a case, I will cease to be his or her tax agent. I will cease to be his or her tax agent, because obviously I do not want to get into these fraudulent activities and be penalized for the same. I am a tax professional. I should maintain my professionalism. Okay. So I will cease to be his or her tax agent. I will notify HMRC that I have ceased to be his tax agent without mentioning the reason why. Okay. So then HMRC technically will look into the matter themselves. So these are the actions that I could take. Okay. So if in case there is any dishonest conduct by the tax agent, client is trying to hide certain income, as a tax agent, I'm supporting him. So that is a dishonest conduct as a tax agent, which is done by me. So on that, there is a civil penalty of £50,000 for the dishonest conduct of the tax agent. In case where the penalty exceeds £5,000, HMRC may publish details of the penalized tax agent. So maximum penalty as a tax agent, the maximum penalty on me will be £50,000, and wherever my penalty increases from is exceeding £5,000, HMRC will publish the report to everyone. So everyone will know that this tax agent is actually penalized for the fraudulent activity that he is supporting the client in. Right? So I will not be able to work as a tax agent. So technically, HMRC will actually publish the report to everyone. Okay. So whether his penalty will be as a tax agent, my penalty will be 5,000 or £50,000. It depends on the level of concealment that I've done. So the level of incomes that I'm hiding, the number of fraudulent activities that I've committed. Depending on that, the penalty will be charged. Okay, and that is upon the discretion of the taxable authorities or by the case laws. Okay. Which of the following is a statutory legislation? Case law is not a statutory legislation, right? Case laws are just certain cases through which you understand that what is the tax law trying to specify, right? So, which of the following is a statutory legislation? Case law is not. Extra statutory concessions, they will next, after extra statutory concessions are provided to you, after that they could be enacted in the law, but if they are right now just extra statutory concessions, they are not a part of the statutory law. Okay. HMRC statement of practice, they are just providing you information about the tax law, so they are not statutory laws. Income Tax Act, yes, this is the tax law which is available to you, so this is going to be the statutory law. Okay. And ACCA members discovers that the client has deliberately not declared a source of income on their tax return. Which of the following is correct? The member should immediately notify HMRC of the revenue and customs of the error. No, because obviously he just needs to cease to trade and not mention and notify HMRC that he has ceased, sorry, not cease to trade. He should cease to act as a tax agent and notify HMRC the same without mentioning that why he has ceased to act as a tax agent for the client. Okay. So here he should not directly notify HMRC about the error. The member should notify the client of the error and explain the potential consequences before considering ceasing to act. So yes, he should actually mention to the member that he is doing this fraudulent activity and he should not do it, because of which some things could be a potential consequence for him. He could be penalized for the same. C is the member must immediately make a remote to National Crime Agency. No, it is first he shall check and then only decide whether he wants to make the report to the National Crime Agency or not. The member should cease to act. Technically, it is done by the MLRO, not the tax agent. So technically, this will be wrong. The member should cease to act for the client if they refuse to disclose the error and advise HMRC that they have ceased to act and the reason why. I agree that if in case the client is actually doing any fraudulent activity, I shall notify the client. If the client still doesn't listen to me, I shall notify HMRC that I have ceased to act as a tax agent for the client. But obviously, I should not mention the reason why. Okay, so here this goes wrong. So option D is also wrong. Option B is going to be the correct option. Okay. So with this, guys, we are done with our chapter number 2. I hope start to end it was clear to you all. I hope start to end it was clear to you all, guys. We have understood the basics of this chapter. Now we're going to move to the chapter number 2. Before that, we'll take a 10-minute short break and return with the latter part. Okay, guys, let us start with the first chapter towards calculation, that is how to compute the basic income tax computation. Okay, how to do the basic income tax computation for a person. So let's get started. Now, firstly, we're going to understand the tax year, guys. So the tax year, as I already told you, it runs from 6th April to 5th April. Okay. So if it's a tax year 2022, starting from 6th April 2022, it will end at 5th April 2023. Okay. So this tax year is known as 2022-23. Now all the incomes of an individual. Okay. This is the income tax computation of an individual. Always remember that. Okay. All the incomes of an individual that has been received during the year, right? Just mention it like this. Yeah. All the incomes that of an individual that has been received during the year minus all the reliefs that he is getting for any payment that he has made towards the charitable contribution or anything. How the reliefs you will get, you'll understand that later. But all the reliefs that he is getting for the same, that will be deducted, and the remainder will be the net income. Right? Now, how you will understand this, there are a lot of details in it. So let's get started with the chapter. So income tax is levied in the below conditions which are satisfied. So firstly, the tax year is 6th April 2023 to 5th April 2024. That is the tax year 2023-24. The taxable income depends on the taxable person. Okay. So what is the taxable person? What is a taxable person? If that person is residing in UK and is considered as a UK resident. Okay. So there are certain tests from which we can determine whether the person is a UK resident or not, that we will cover in this chapter itself. So guys, if that person is residing in UK and is classified as a UK resident, his incomes that he is generating in UK and also any income that he is generating overseas, that means in any other country, all will be taxable under UK. If there are any double taxation agreements, then he can, ignore that. Okay. So that is any which way is not examinable. So any incomes that he is generating in UK and in overseas, that will be taxable if he is a UK resident. And if he is not a UK resident, if he is not a UK resident, only the income that he has generated in UK, that will be taxable in UK. Okay. So the level of income that is going to be taxable, that depends on whether a person is a UK resident or not. Okay. So it is very important to actually determine whether the person is a UK resident or not. And obviously for that we have UK residency test that we are going to understand in this chapter. Now, there are certain incomes which are exempt. Okay, that means on that there is no tax to be charged. That is interest from NSI certificate. That means you are actually investing in your national savings and investment certificates. Okay, so if in case you are receiving any interest for the investments that you've made there, that is not considered as a taxable income. That will be considered as an exempt income. That means no tax charge will be on that. It is considered as a tax-free income. Okay, any incomes that you're getting from gaming, from batting, from lottery, all those are going to be exempt incomes. On that, it is considered as a tax-free income. On lottery in India, tax is charged very high, but in UK, on lottery winnings, on bond winnings, premium bond winnings, and everything, there is no tax charge. Okay, like you can see here, premium bond winnings. Okay, so if I've got any bonds on which I'm receiving any premium winnings, because I've purchased very specific bonds that there they provide certain winnings. So any income that I've received there, that will also not be taxable, guys. Scholarship to a taxpayer, if in case a taxpayer is receiving a scholarship, those scholarships are not taxable. Income from individual savings account, as I told you, if I am saving any income in a certain account, that is individual savings account, specific into these accounts, then in such a case, those incomes are tax-free incomes. Okay, state benefits, any accident has occurred because of which I'm receiving any benefits. I had made a medical insurance or anything. So in such a case, I'm receiving any amount there, that will be exempt income. Okay. Interest on repayment of tax. Maybe, I have paid higher tax. I have paid higher tax to the tax authorities, and the tax authorities are repaying those tax to me. That means maybe I have paid $10,000, 10,000 pounds worth of tax, but after filing my return, I identified that only 5,000 pounds was the tax which is liable to me for the year. So that means 5,000 I've paid extra, correct? So the HMRC will repay that amount back to me, right? So when they repay me, during the repayment, maybe there could be a delay, right? That they were supposed to repay me probably by 1st October, right? But they repaid me by 31st December. So that means they have paid me 3 months later. They have made a delay in the payment, and the extra payment that they were supposed to repay me was 5,000 pounds. So, guys, always remember this 5,000 pounds, whatever is the interest on it, I will also receive interest because HMRC is delaying the repayment to me, correct? So, they will also calculate interest. Maybe say the interest is 2%, right? So, 5,000 into 2%, which is 100 pounds. 100 pounds is the interest that I'm receiving because HMRC is delayed the payment to me. So that is an interest on the repayment of tax. That is an income to me, correct? That 100 pounds. So that will also be an exempt income. Now, what are the incomes which are taxable incomes? Any employment income. I'm working as an employee, and from that I'm generating any income. So that is my employment income. Property income if I have any, correct? So if I'm having a property which I've given out on rent, right? I'm generating the rental incomes from it. That is also going to be a taxable income. Dividend income. Purchased any shares, and from the purchase of the shares, I'm receiving any dividend. Okay. Because on the shares, the companies usually pay dividend to the shareholders, correct? So that dividend income is also going to be taxable. Trading income, if I'm doing certain trading activities as an individual, and from those trading activities I'm generating any income, so that will also be taxable. Pension income, maybe I'm receiving certain pension amount, okay, so that also can be considered as a taxable income. But obviously most of it would also be exempt. You have to go through pension income for that. Savings income, if I'm making any deposits, purchasing any shares, okay, if I'm making any deposits in the individual savings account, then it is exempt. But otherwise, if I have any other savings income, then that will be considered as my taxable income. Okay, income from any trust that I've received and so on. So these are all considered as my taxable income. Okay, now we jump to personal allowance. What is personal allowance, guys? Let us understand. Every individual who's earning up to 12,570 pounds in UK, who's earning up to 12,570 pounds, if he's a resident of UK, his overseas income and his UK income in total is 12,570 pounds or less, then no tax charge will be there. Because obviously his annual income is just 12,570 pounds or maybe less than that. He's earning already so low, right? So obviously the tax authorities, they don't want to collect money from them because they are already from the low income group. They are earning so low, correct? So up to 12,570 pounds, your income is exempt. Okay. That is known as personal allowance. So you will get a personal allowance of 12,570 pounds. Okay. So if my total income is 30,000 pounds for the year, from that on 12,570 pounds, no income tax charge will be there. And on the remainder, 30,000 minus 12,570 pounds, 17,430 pounds will be charged for my income tax. Okay. I hope this is clear, guys. The amount of the personal allowance is reduced potentially to nil for high income group individuals. So for the individuals who are having a yearly income of more than 1 lakh pounds, for them gradually the PA, that is the personal allowance of 12,570 pounds, that will gradually reduce and land up to zero after a certain extent. How it will land up to zero and how it will gradually reduce, you'll understand that later. Okay. Now, always remember guys, the personal allowance for married couples. Okay, for married couples, it is different for both of them, right? That means there is a husband and there is a wife. Both of them are considered as separate taxpayers, and for both of them there is separate personal allowance provided. Okay, always remember that. Now, who are the accessible persons? Always remember, guys, any individual who's over the age of 16 and who is a resident in UK, for those are considered as accessible persons in UK. All individuals, including children, are chargeable to income tax. Both spouses with a married couple are treated as separate individuals. Okay. So, as I told you, the husband and wife are separate individuals. They are separately accessible persons, accessible taxpayers. The tax residency status of an individual determines how much income tax is going to be paid, right? So that means if he is a UK resident on his UK income and overseas income, tax assessment will be done. If he is not a UK resident, only the income that is generated in UK, he will be taxed on it. All persons resident for UK, no, for tax purposes in the UK, okay, technically you know that, right? They are charged on their worldwide income. Now, married couples, as I already told you, that married couples, they are to be considered as separate individuals while computing the income tax, while doing the income tax assessment. And generally, if in case they own, maybe say, there is a husband and a wife. Together, they own a house. Okay. Together, they own a house. Now, that house is given probably on rent. That was an additional house that is given out on rent. The rent that they are receiving is 10,000 pounds. Okay. So technically it goes 50-50 if they are jointly owned, right? 50% wife has the ownership and 50% husband has the ownership. So technically both the spouses, 5,000 rent will be taxable because it is their income, right? And if in case the husband says that, I own maybe not 50%, I own 70% of this house. Okay. Or maybe the wife says that I own 70% of this house. So technically, guys, making it simple, if there is no election made, then the income will be distributed 50-50 and accessible 50-50 for the husband and for the wife. But if the wife says that I own 70% of this house, so technically, if the rent is 10,000 pounds, 70% of it, that is 7,000, should belong to me, and 3,000 should be the income in my husband's hand. Okay. So then an election to be made, it should be made to HMRC that, this is the scenario. It is not a 50-50% allocation. It is a 30-70% allocation. So accordingly, you can make an election to make the changes. You have to make an election to HMRC. Okay. Okay. So children under the age of 16 are also considered taxable persons, but usually their income is not so high. They fall short of 12,570 pounds personal allowance, right? So technically their income will never be chargeable. Okay. But they are considered as accessible persons. Okay. Now we'll understand the basic format of how to calculate the income tax. So guys, there will be your trading income, your employment income, property income, and pension income. All these are considered under the head non-savings income. So these are all your non-savings income. These are not certain incomes that you're generating from the savings that you've made. right? You're doing the trading. It is your continuing business activity from which you're generating income. You're doing your work as an employee from which you're generating employment income. You have a property that you're given out on rent from which you're earning rental income, and you have a pension that you're receiving. So all these are non-savings income. These are not the savings that I've made from which I'm generating income. So these all will be considered under the head non-savings income. Then there is savings income in which there is bank interest and building society interest. Maybe I have deposited certain amount in a bank on which I am receiving interest. Correct. So that is my interest income. So that will be under the head savings income. That is bank interest. Okay. And what is building society interest? Maybe I have actually invested or deposited certain amount in a financial institution which is not a bank. Okay, it is in a financial institution, but that is not a bank. So any interest that I'm receiving on the investment that I've made, that will be considered as a building society interest. Okay, that will be considered as a building society interest, and it will be charged under the head savings income. Okay, and the last head is the dividend income. It is the last head, dividend income, that is there. So technically there are three heads: non-savings income, savings income, and dividend income. In non-savings income, all these incomes will be there. In savings income, these two will be there, and dividend income will be there separately. Okay. So I hope the basic format is clear to you all. Now, this will give you a total income that you have for the year. From that, whatever reliefs that you've been given for any expenditures that you've incurred, right? So maybe you're doing your trading, for that you're purchasing goods and everything, that is your expense. So for that, you get a relief. Those reliefs will be deducted. After that, you will get your net income, and from that net income, eventually your personal allowance is deducted, and on the remainder amount, you will have your taxable income on which you will calculate your tax liability. Okay, I hope this part is clear to you all. Let's move on to the latter part. So classification of income, as I told you, there are these incomes are nothing but your income earned from employment and self-employment, that is from trading and from employment. Income arising from ownership of property, that is property income, right? Investment income that you have from savings and dividends income. Income from pensions, income exempt from tax. All these are the classification of incomes. Firstly, in the non-savings income, there will be a trading income, the profit that you get from trade, from profession, right? Maybe I'm a tax agent who is actually helping calculate the tax liabilities for individuals or for companies. So that is, I'm doing certain services, freelancing services for them, and that is considered as my trading income. Okay. Or from my vocation, that means not a vacation or something, guys. Vocation is nothing but that is other than any sort of profession or trade, that maybe I'm doing any YouTube lectures from which I'm generating any income from YouTube. So that is my vocation. Okay. Employment income is nothing but where I'm an employee, I'm receiving the salary, any sort of bonuses, and many other incomes. And that will be dealt with later on in chapter number 5, that we are not doing for our YT revision. You will understand it directly in your chapter number 5, that is employment income, in which case you will have income such as salaries, bonuses, any paid leaves, benefits that you get, any sort of sick leaves, correct? Then all other taxable benefits, like the company has given you a car or anything. So all those are your incomes on which you're going to be taxed. Okay. Then pension income. So what is pension income? Income from an occupational or personal pension fund. If I'm an employee, I contribute to the occupational pension scheme, or I can contribute to the personal pension scheme. But if I am an employer, that means I'm actually doing my own trading activities, then I do not have an option of occupational pension scheme. I can only have my own personal pension fund. Okay. Then comes investment income, savings income, and dividend income that you already know of, right? Now, what are the exempt incomes? Interest that I'm receiving from investing in national savings and investment, that is NSI certificates, that is an exempt income. That means it is a tax-free income. Then from betting, lottery, or premium bond winnings, that is an exempt income. That means it is a tax-free income. And income received from individual savings account, that is also an exempt income. Okay, guys. Reliefs are directly deducted from the total income, and after the reliefs being deducted, you will get your net income. Okay. As I told you, the personal allowance is 12,570 pounds for the tax year 2021-22. It is applicable till now. That is for the tax year 2022-23 and everything. Okay. So always remember, the personal allowance is first given to the non-savings income, then given to the savings income, and lastly given to the dividend income. Right? So maybe say that my non-savings income is 10,000 pounds, my savings income is 2,000 pounds, and my dividend income is 1,000 pounds. Right? So first, my total personal allowance that I can take is 12,570 pounds. Correct. It is 12,570 pounds, my personal allowance that I can use. Firstly, I'll use it with my non-savings income to reduce it to zero. Still 2,570 pounds is remaining. So 2,000 I'll deduct from here to make this zero. Then if there is still unutilized personal allowance, that is 570 pounds that I can use from here to make my dividend income 430 pounds. Okay. Technically, it is not like this. I'm just showing you that how it can be utilized, your personal allowance. Okay. If there is any surplus personal allowance for the year, it is lost. Okay. Maybe my total income is only 11,000. Right. So the personal allowance that I can get is 12,570 pounds. So it's not like I will deduct 12,570 pounds and I'll get a negative amount here of 1,250. Okay, it will be 12,570 minus 11,000. Yeah, 1,570, sorry. 1,570 is a negative amount. That doesn't mean the government is going to pay me that, right? Here, if in case my personal allowance is 12,570 and my income is 11,000 pounds. So I'll deduct the 11,000 to 0 and 1250. Sorry, how much was it? 1,570, correct? 1,570 pounds of personal allowance that is lost, that is wasted. Okay, because it was the unrelieved personal allowance that was available. Okay. Okay, all this is not required. Okay. As I told you, wherever the income of an individual is high, if your income is so high, why would you be given a personal allowance? You don't need to have personal allowance, correct? Because your income is already very too high. So if in case your income is higher than 1 lakh pounds, then in such a case your personal allowance will keep on reducing, and the formula for keep on reducing the personal allowance is nothing but adjusted net income minus 1 lakh pounds into 50%. Whatever is this amount, that will be reduced from the personal allowance and you will get the reduced personal allowance only. Okay. So guys, how do you calculate this adjusted net income? Wherever firstly your adjusted net income is greater than 1 lakh pounds, your personal allowance will be reduced by applying this formula. Okay. So maybe say my net income is 1,05,000 pounds. That means it is higher than 1 lakh, correct? For calculating the adjusted net income, ANI, I will subtract gross gift aid donations from it. Okay. Gift aid donations are like a charity to be made in as per the gift aid scheme. Like you're gifting something to the poor children or anything. So it is like a charity made under the gift aid donation scheme. So maybe you contributed 1,600. Okay. Maybe you, sorry, not 1,600 guys. I'll just restate it. Maybe say your net income is 1,05,000 pounds. Okay. Maybe you wanted to contribute 2,000 as a charity so that your income reduces and your income reduces and you just have to pay less tax probably. So you contributed under the gift aid scheme, under the gift aid donations. Okay. So if you want to contribute 2,000 pounds, 80% is going to be paid by you. That means 1600 will be paid by you and the 400 is going to be paid by HMRC. Always remember, this is a benefit given by HMRC that if you want to make a contribution of 2000, you have to pay only 1600 and the remainder 20%, which is 400, will be paid by HMRC. But when I calculate the income, the adjusted net income, I will get the deduction for the gross amount. That means the net amount that I've paid is 1600, but I will get a deduction for 2000 pounds. Always remember that. Okay, so this is net. Okay, this is net and this is gross, and I will deduct my net income by 2000 pounds, not by 1600, even though I paid just 1600 for calculating my adjusted net income. Okay, this is just for calculating the adjusted net income, guys, not the income tax liability. Less any gross personal pension contributions. If I'm making any pension contributions towards my pension scheme, that is for my future benefits, that when I become old, at that time I will need that money. So obviously I'm saving it for my future benefits, for my future livelihood, and is the reason why those will be deducted here while computing the adjusted net income. So maybe I contributed 1000 pounds to my gross personal pension scheme. How it is gross and all that you'll understand in the pension scheme chapter. So technically my income becomes how much? Adjusted net income. 1,05,000 was my net income. From that I'll take 2000 pounds as a deduction and 1000 pounds as a deduction. So 1,03,000 pounds is my adjusted net income. Now my adjusted net income is still higher than 1 lakh. So my PA will gradually be reduced as 1,03,000 pounds minus 1 lakh pounds into 50%. So how much will be the reduction? It will be 1,03,000 minus 1 lakh, which is 3,000, into 50%. That is going to be 1,500 pounds. So this is going to be reduction in PA. Okay, reduction in PA. So when I calculate my income tax liability, I will state that my income is 1,05,000 pounds, right? I will not reduce all this while calculating the income tax liability. All this is reduced only when I want to calculate my adjusted net income. Okay, so my income will remain at 1,05,000 pounds. And when I deduct the personal allowance from it, my personal allowance is 12,570, but from that 1,500 has been reduced because my income is higher than 1 lakh. So we calculated that, correct? Right? So 1,500 will be reduced. So 12,570 pounds minus 1,500. That is, I will get a PA of only 11,070 pounds. Right? So the remainder will be taxable. That is 93,930. Okay? I hope this is clear, guys. See, they've already explained you that part, what I directly gave you an example for, right? So always remember, PA is to be rounded up to the nearest pound if in case you get it in points, right? Although in examination, rounding up or rounding down, both is possible. That means maybe your reduction in PA is 135.37, right? So you can round it off to 135 pounds also. Sorry. You can round it off to 135 pounds also, and you can round it off to 136 pounds also. Okay. A taxpayer with A&I in excess of 125,000 pounds, 140, will therefore be entitled to no PA at all. Right? Why? I'll show you that. Maybe say the adjusted net income after deducting the gross pension contributions and the gift aid donations. Maybe my adjusted net income is 125,000 pounds, 140. Right? 125,000, 140 pounds is my income. Okay, adjusted net income. So how do I reduce my PA? Adjusted net income minus 1 lakh into 50%. Correct? So I will identify the reduction in PA, that is 1,25,140 minus 1 lakh, which is 25,140 into 50%. That is, I will have to reduce my PA by 12,570. I will have to reduce my PA by 12,570. So my personal allowance is only that much, correct? My personal allowance is 12,570, but it will be reduced to by 12,570 because my income is greater than 1 lakh. So it will become 0. So at 1,25,140 pounds, if my adjusted net income is this much or greater than this, my PA will be 0. That means no PA will be given to me. Okay. Okay, now let us calculate here. Ethan received trading income of 1,10,000 pounds for the tax year 2021-22. He also made gift aid donations of 4,000 pounds, which is gross, not as net. Net is not given to you because you have to directly deduct the gross. If the net is given to you, maybe say 1,600 I've contributed, so you will just multiply it by 100 and divide by 80, so you will get 2,000 here. Okay, which is your gross, and always the gross amount is deducted while calculation of adjusted net income. Okay, so here 1,10,000 is my net income because obviously there are no reliefs. So this directly becomes my net income. From this, I will deduct firstly the gross gifted donations, that is of 4,000. So my adjusted net income becomes 1,10,000 minus 4,000, that is 1,06,000, correct? Now you have to calculate Ethan's taxable income. So his taxable income will be 1,06,000. It is greater than 1 lakh, correct? Adjusted net income minus 1 lakh into 50%, that is going to be 3,000, correct? So 3,000 is going to be the reduction in PA. Okay, so that means your income is 1,10,000. Your PA that you will get is nothing but 12,570 minus 3,000, which is the reduction in PA. So you will get only 9,570 worth of PA, and your taxable income will be 1,10,000 minus 9,570. That will give you 1,430,000. Okay, so this will be your taxable income. Always remember, guys, before deducting the PA, after taking all the incomes and deducting all the reliefs from it, you get net income. Okay, this is your net income. After you deduct the PA, it becomes your taxable income. Okay. Okay. Now, what are the tax charges which are applicable? For non-savings income, for savings income, and for dividend income, it is different, guys. So we have to understand according to the heads, right? So for non-savings income, it is going to be 20%, 40%, and 45%, depending on a limit. Okay. So if my income crosses 37,700 pounds, my tax charge is 20%. If my income crosses 1,50,000 pounds, sorry, yes, if my income is still, sorry, I'll explain it again. See, maybe my income is 1,60,000. Okay, I'll not take this. If my income is 30,000 pounds, okay, so that means first I'll get a PA, which is a tax-free income, 12,570 pounds, correct? So the remainder is nothing but 17,430 pounds, correct? So my income is 30,000. If it is less than 37,700, then in such a case, only 20% charge will be there, right? My income is less than 37,700. So your only 20% will be charged. If my income would have been 50,000, so then in such a case, 40% will be charged, because from 0 to 37,700, 20% will be charged. From 37,701 to 1,50,000, 40% is charged, and from 1,50,000, 001 and above, 45% tax is charged on my non-savings income. Okay. On my savings income, guys, it will be 0, 20, 40 and 45. 0 will be certain exemptions that I will be given. So that I'll make you understand later. Okay. Now for the dividend income, these rates are not there, guys. These rates are not applicable. I'll show you the new rates that are applicable once we reach to the investment income chapter. Okay. Okay, guys. So firstly, a 20% tax is charged up to an income of 37,700 pounds. If your income exceeds that, that is, it is more than 37,700 pounds, but till 1,50,000 pounds, then on that 40% will be charged. And if it's greater than 1,50,000 pounds, then on it, the 45% will be charged. Right? So for the first 37,000 pounds, it is 20%. It is the basic rate band. Above 37,000 pounds to 1,50,000 pounds, it will be, okay, it is not 37, guys, it is 37,700. Okay, so for the first 37,700 pounds, 20% will be charged. From 37,701 to 1,50,000, 40% is charged, and above 1,50,000, 45% of the tax is charged on the non-savings income. As I've already told you that wherever you are calculating your income tax liability, first the income tax liability shall be calculated for the non-savings income, then for the savings income, and lastly for the dividend income. Okay. Okay. Let us do this sum. Kala has a taxable trading income of 43,765 pounds. Okay. And she has an employment income of 7,000 pounds. Her trading income and employment income are under the same head, that is non-savings income. So her total income becomes 43,765 plus 7,000. Correct? That is 50,765 pounds. Okay. She has no other savings or dividend income. That means we have to only calculate the tax liability for her non-savings income. Always remember, guys, maybe say this is your bar. Okay, I'll just remake it. Your total income is 50,765 pounds. Always remember, guys, from 0 to 37,700, she will be charged 20% tax. But here, her income is exceeding 37,700. So her income would fall, here, somewhere here, 50,765 pounds. Correct? So the amount above for 37,700, only this amount on it 40% will be charged. It's not like I'll directly take a slab of 40%. Till 37,700 it will be 20%. Above 37,700 it will be 50,000. And always remember, guys, this is the annual income that we take into consideration. Okay. So let us compute the tax liability. Her trading income you can see here is 43,765 and employment income of 7,000. 43,765 employment income of 7,000. So her total non-savings income is this amount, right? Non-savings income. From this, you will deduct firstly your reliefs, if any. But there are no reliefs information available here, so that is 0. So you will get your net income. So your net income is nothing but this amount, correct? Now from this amount, you will deduct the personal allowance, that is of 12,570, which will give you a taxable income of 38,195. Right? So this is your taxable income. On this income, you are going to compute the tax liability. How will that be calculated? Let us look at it. So guys, from 0 to 37,700, 20% is your tax liability on non-savings income. So technically, your total income is 38,195. So from 0 to 37,700, your tax liability will be 20%, and your income is falling somewhere here, that is 38,195. So on this portion, it will be 40%. Okay, because it is exceeding 37,700 annually, right? So till 37,700, the tax liability will be 37,700 into 20%, that is 7,540, right? But your total income is 38,195. Okay. From that, obviously on 37,700, you've already charged tax of 20%. So that will not be considered. And on that remainder, you will charge 40% tax. So it is nothing but 38,195 minus 37,700. Your additional income is 495. So on that, you will charge 40% tax. That will give you 198. So your total income tax liability will thus be 7738. Okay. I hope it is clear to you guys. Moving on to the next part. Okay. You all can do this by yourself, guys. Right? So technically, her income is 1,35,000 pounds plus her employment income is 33,000 pounds 680, correct? So her total income is nothing but 1,68,680, correct? So when you prepare the number line from 0 to 37,700, this portion she will be taxed 20%. Obviously, the personal allowance here will be nil because her income is in excess of 1,25,140, and after this level of income, your personal allowance becomes zero. Correct? So there is no personal allowance here. So from 0 to 37,700, your tax liability will be 20%, and it is exceeding 1,50,000 also. Correct? The next bar is 1,50,000. So from 37,701 to 1,50,000, it is 40%, and her income is falling somewhere here. That is 168,860. Correct? So in this part, she will pay 45% tax. Okay? I hope it is clear, guys. You all just need to take the values and multiply it with the tax percentage. You will get the answer very easily. Okay? We can skip this sum as it has no requirement to be done. Okay. Now we jump to marriage allowance. Before that, we'll again take a short break of 10 minutes and return with the latter part of this chapter. Okay, guys, let us let us continue with the remainder of the chapter. Now, marriage allowance. Marriage allowance is a specific allowance given to the married couple and also to the civil partners who elect to transfer an amount of their personal allowance to his or her civil partner or spouse. So maybe, as I told you, that a married couple, there is spouse 1 and there is spouse 2. Okay. It could be the husband, wife, or any other civil partner that is there. Okay. Now, here, what will happen? As I told you, each one of them is assessable as a separate taxpayer. So, each one of them will get a personal allowance of 12,570 pounds. Okay. So, they have an option to use the marriage allowance, and maybe say spouse 1 has an income of only 5,000 pounds. Right. So his total personal allowance will not be used here because he has an income and he can only adjust 5,000 pounds. Right. So the remainder, it is lost. Right. So he could rather make an election to actually transfer some amount of his personal allowance to the spouse too. Okay. So that is known as marriage allowance. And obviously, guys, here the total amount of 12,570 pounds cannot be transferred because maybe say there is one spouse, that is the wife. Okay, that is the wife. And on the other hand, there is a husband. The wife is working. Okay. And husband is probably taking care of the children in the house and everything. So the wife is working and the husband is taking care of the children. Now, if the wife is working, she might be earning an income of 20,000 pounds. Okay, the husband is not working, he is not earning any income. So, wife would get her personal allowance of 12,570 pounds, correct? And the husband would also have 12,570 pounds, which is completely unused, obviously, because he is not earning any income, right? So, technically, if he transfers everything to the wife will also have nil income because her personal allowance in total is greater than 20,000 pounds, correct? Her personal allowance and the transferred personal allowance. So it is not like the complete personal allowance will be, transferable because like that, the government will not be able to collect any tax only. Correct? So is the reason why only an personal allowance of 10% can be transferred. And that 10% of 12,570 is nothing but 1257, correct? It is 1257. Not this exact amount, it is 1260 because they've taken an exact, they've taken an approximation here to make it simpler. So 1260 worth of personal allowance can be transferred under the marriage allowance calculation. Okay. The marriage allowance allows a spouse or the civil partner to elect to transfer it. The marriage allowance may also be referred to as a transferable amount. The marriage allowance is available provided neither spouse or a civil partner is a higher or additional rate taxpayer. That means neither the spouse or the civil partner should have an income in excess of 37,700 pounds. Both of them should be, their income should be lower than 37,700 pounds. Then and only then this can be possible. Okay. And this income that is there, it should be after deduction of the personal allowance. Okay. Okay. Electing the for marriage allowance. So to they can actually transfer 10% of their personal allowance, which is 1260 approximately. There is no provision for transferring more or less of this amount. You can just transfer this fixed amount, that is 1260 pounds. Okay. Okay. Let us quickly solve these three sums. Maybe through this you will get clarity. So technically, I think they are just saying that Katie has an income of 30,000 pounds and Emily has a taxable income of zero. Okay. So Emily would choose to transfer it to Katie her personal allowance. Okay. How will the personal allowance will be dealt with? I'll show you. Okay. So first, guys, Who is the one earning? KT is the one earning, right? So I'll write KT, her, what is it? Employment income, trading income, right? It is trading income of KT from her self-employment. Okay. And Emily is studying, so probably Emily is not earning anything. So KT has a trading income of 30,000 pounds. Okay. This is her net income only because there are no reliefs or anything. From this, we directly deduct the personal allowance of 12,570 pounds. So the remainder amount which is payable for tax is 17,430. Correct, guys? Now, on this is my taxable income. This is KT's taxable income. Okay. Now, on this income, there will be tax liability charged, right? So, tax liability will be nothing but her income is 17,430. On that, she will charge 20% tax, right? Because she is below 37,700, correct? So, 17,430 into 20%, 3,486 is going to be her tax liability. And obviously, on the other hand, Emily is earning zero. So she has a personal allowance of 12,570 and the only amount that she can transfer as personal allowance is 1260. Correct? So 1260 she will transfer here. You will not directly deduct that 1260. You will just do it like this while computing the tax liability. You will take that 1260 and you will calculate 20% tax on it. So it will be 1260 into 20% tax, which will give you 252. And this amount you will deduct it from your tax liability. Okay, you will directly deduct it from the tax liability and you will get the remainder to be the taxable amount for KT. Right? So Emily, she has elected to transfer her excess personal allowance. She has done that and we have deducted it. Always remember the transferred personal allowance shall be deducted from the tax liability directly. Okay. Then comes the second one. KT has an income of 13,000 pounds and Emily has an income of 0 pounds. How much was it? 13,000, right? Emily has 0. It is trading income of KT, right? From this personal allowance will be deducted, that is 12,570 and her taxable income will thus be 430. Correct? Her taxable income will thus be 430. Now Emily has no income, so there is her total personal allowance which is available. And if she elects to make a transfer to KT, her personal allowance under the marriage allowance bond, so then in such a case, firstly, her tax liability will be computed as for KT. The tax liability will be 430 is her taxable income, and on that she will be charged 20% tax. So it will be 430 into 20%, that is 86. 86 is her tax liability and she will be allowed to use the transferred personal allowance, that is 1260. Correct? So that 1260 into 20%, that can be deducted from the total tax liability. But if you see here guys, it will be greater, to be honest. Right? That means there is a deduction of 252. So it will sum up to a negative amount, correct? So that doesn't mean that, they will get a recovery of tax or something. You cannot then deduct 252. You can only deduct up to the maximum amount, that is 86, and your taxable income will become 0. It is an allowance given by the government. The government does not want to pay you any amount. Okay. So it's not like if it's a negative amount, the government will pay you. The government will only repay when you have paid them first in extra. Okay. you have made them an excess payment. That is, oh, they will make a repayment. Otherwise, government does not pay you for any excess allowance that you have available to claim. Okay, so the remainder of the marriage allowance that will be lost. Last one, Katie has an income of £30,000, whereas Emily has an income of £11,800 from her part-time employment. So that means probably she started working part-time now with her studies. So she also has an income. Emily also has an income. So how will it be dealt with? Always remember, the amount of transfer is fixed 1260. Okay, it is fixed 1260. So for Katie, she has a trading income of 30,000. For Emily, she has an part-time employment income of 11,800. Right? Now, they will get a personal allowance of 12,570. And here also, if they get for 12,570, here it will be 1730, and here obviously it will be a negative amount here. But guys, you will deduct maximum up to 11,800. Right? Technically, we'll do it like this. We'll deduct 11,800. But always remember, guys, in case of personal allowance being transferred, Emily should have that much of personal allowance. Emily has total personal allowance of 12,570, out of which she has used 11,800 worth of personal allowance. 11,800 worth of personal allowance, that is 12,570 minus 11,800. That means she has only 770 pounds worth of personal allowance available with her, right? So then she cannot make a claim to transfer the personal allowance if she wants to adjust the total personal allowance with her own income. Okay, she cannot make a claim to transfer personal allowance because she can transfer only a fixed amount, that is 1260 pounds of personal allowance, correct? She can only transfer 1260, not lower, not higher than that. Okay, so technically she can claim a personal allowance for herself. Emily can claim a personal allowance for herself only of 12,570 minus she wants to transfer 1260, correct? So if she elects to transfer 1260, she can make a claim only of 12,570 minus 1260, that is 11,310. So that she can make a transfer. Okay. So that means I'll deduct here not 11,800. If she wants to make an election, I will deduct here 11,310. So that means Emily will have a taxable income of 490 and then she can make a transfer of 1260 to Katie. Okay. She should have that 1260 to transfer. Okay. So she will deduct only this much so that she have sufficient amount to transfer. Now let us compute the tax liability for Katie and Emily. Firstly, we'll do it for Katie. Her income is 17,430. On that, she will pay 20% tax. And if you see in your guide, both the spouses, they have their income less than 37,700. That means both of them are basic rate taxpayers. Okay, they should be basic rate taxpayers always. Yes, so her tax liability is 3486, correct? And from this, she will get a deduction of the transferred amount of 20%. So that means this amount will be reduced. Oops, I'm so sorry, guys. Yeah, where were we? Yes. So that means she will reduce 1260 into 20%. Oh, okay, I think there is something different going on here. Just a second. 1260 into 20%, that is she will get a deduction of 252 and the tax liability on Katie will be nothing but 3234. Correct? For Emily, she could only make a deduction of personal allowance of 11,310 because from the total personal allowance of 12,570, she had to transfer 1260 to Kate, correct? And that she did. So that means she deducted only 11,310 of personal allowance. So on the remainder, that is 490. On 490, she will have to pay 20% tax. And that will be nothing but 90. Okay. So I hope this sum is clear start to end and how the personal allowance can be transferred. Always remember personal allowance is a fixed amount of 1260. If you want to make a transfer, you can only claim the adjusted personal allowance. Okay, for yourself. Okay, now to be able to actually make a claim, the election should be made in advance. Okay, so if the election is made in advance, that for years and years to come, I will always transfer my personal allowance. Maybe say that one person in the spouse is not going to work only. So she has already made an election forever that she's going to actually adjust the amount. I mean, she's always going to transfer her excess personal allowance to her other spouse. Okay, so in advance by 5th April 2022. That means they should actually do it in advance and the election will remain in force for the future tax years. Okay. So it will be in force forever till wherever you not change it. Okay. Unless you want the election to be withdrawn. That means maybe you're starting your own business or maybe you're earning your own incomes because of which you want to adjust your personal allowance for yourself. So you would withdraw the election to transfer your own personal allowance to your spouse, or in the conditions for where the reliefs are no longer met, maybe where the reliefs are no longer met, maybe one of the spouse, their income has exceeded 37,700, so then they become a higher rate taxpayer, so then they cannot claim this marriage allowance. Okay, in arrears, that means I have not made a claim to always transfer it, but I want to transfer it. Maybe say I wanted to transfer for my income 2022-23. Okay, so I can do it in arrears by the end of by within 4 years from the end of the tax year. So this tax year 2022-23, it ends on 5th April 2023. So 4 years from here, that is 2024, 2025, 2026 and 2027. So by 5th April 2027, I can make a claim for this year to transfer my personal allowance to my other spouse. Okay. In this case, the election will only apply to the tax year in isolation. That means whichever year you want to claim, in that year only you can actually do it. Okay. Now for the employees, what happens is mostly the employees actually pay as you earn. Okay. So technically what happens is there is an employee who has a fixed income of 50,000 pounds monthly. Actually, monthly 50,000 is too much. I'll just reduce it to 7,000 monthly. Okay. An employee is there. His fixed income monthly is 7,000 pounds. That means the employer knows that his income is going to be taxable because 7,000 into 12, his income is reaching 84,000 pounds. So obviously the employee is going to be taxable. So every month when the employee will receive the salary, okay, from that salary, some amount will already be deducted as a pre-collection of tax. Okay. So not 1,000 pounds, I'll reduce it to 500 pounds. Okay. So that means the employee earns the salary of 7,000, but the employer will pay the employee the reduced amount, that is only 6,500 pounds monthly. Okay. And collect 500 pounds of tax on the employee's behalf every month. Okay. So eventually, technically, what is the employee doing here? They are paying HMRC as soon as they earn. So as soon as they earn the employment income, it is paid to HMRC because the employer collects it from the employee on behalf of HMRC. Okay. And then the employer only pays it directly to the HMRC. So here, the employee is actually paying as soon as the employee earns. Correct. So is the reason why here pay as you earn comes into existence. Pay as you earn. Pay. Okay. Now whenever afterwards by the year end, where the employee will show his income, that my income is 84,000 pounds, and after calculating the personal allowance and everything, the personal allowance will be reduced. That is how much? 12,570 pounds. Correct? So 84,000 minus 12,570 pounds, that is 71,430. Then I'll calculate the tax liability from 0 to 37,700. It will be 20% from 37,700 to 1,50,000. It is 40% and so on. Right? So if I compute the tax liability, it will be how much? Just let me check. 40% plus 75%. Yeah. So the tax liability will sum up to 21,032. If you calculate it, you will get the same amount. Now, guys, the tax liability is 21,032 and 500 every month I've already paid as an employee. 500 every month I've already paid to HMRC directly. Correct? So 500 into 12 months. That means 6,000 I've already paid as my PAY. So from my total income tax liability, that PAY will directly be eliminated because I've already paid that much amount, and only the remainder will be the tax liability which is to be paid. Okay. I hope start to end it is clear to you guys. So as I told you, you compute the total income tax liability and deduct the PAY because that much of income tax you've already paid as soon as you earned it every month, right? So remainder will be your income tax which is payable. Now what is the difference between income tax liability and income tax payable? Income tax liability is the liability that falls upon me, which is calculated or computed using my incomes for the year. And income tax payable is the amount which is actually to be paid to the government. Okay. So income tax liability is, this is calculated using my incomes for the year, and amount that is payable, that is only this much because I have already paid certain amount, correct? So these could be different. Okay, moving on to this sum. Vakar provides you with the following information for the tax year 2021-22. They have a trading, Vakar has a trading income of 23,000. They have a salary in gross of 28,400 pounds. He has no other sources of income for the year, although he does notify HMRC that he has actually suffered 3310 pounds of PAY during the tax year 2021-22. That means technically he has already paid 3310 pounds of PAY. Correct? So how will you calculate the tax liability here? We are doing it for Vakar. You can see here, guys, his trading income is 23,000 and he has an employment income. It is 23 and 28. Right? From this, so this is your total of non-savings income. Which is also your net income because there are no reliefs to be deducted here because there is no information about it, correct? So technically your non-savings income is 51,000 pounds, right? Now from this your personal allowance will first be deducted of 12,570. So what is your income? It is 38,430, correct? So from 0 to 37,700, your first taxable income, oops, will be charged at 20%, correct? So it is equal to 37,700 into 20% tax, that is 7,540, right? And on the remainder, because your total income is 38,430, right? But from that 37,700 is already settled, correct? So 38,430 minus 37,700. On that, you will be charged 40%, right? So here it will be 38,430 minus 37,700. That is 730. So 730 into 40% tax liability, that will be 292. So your total tax liability will be 7832. This is your income tax liability. Okay. This is your income tax liability, guys. Now from this income tax liability, he has already paid 3310, correct? He has already paid 3310. So PAYE of 3310 will be deducted, and thus the income tax which is payable for the year will be nothing but 4522. Right? This is the income tax which is payable for Vakar for the year. So I hope you have understood the difference between the income tax liability and the income tax which is actually payable. Okay? Okay, we can skip this as of now. It is not required. Yes. Now we'll understand the next part, that is qualifying interest payments. But before that, we'll take a short break of 5 minutes and then return with this chapter with the intention to complete it. Okay? Okay, guys. I hope we are back from the break. Let's get started with the remainder. Now, qualifying interest payments. So always remember, guys, wherever an employee is working or someone is working or they are trading, from their trading income, from their employment income, there are certain reliefs that we saw that they could claim, right? We saw in this computation. Where is it? Here, you can see your reliefs. After deducting the reliefs, they can actually get their net income, and after that, the personal allowance is deducted. Okay. So, what are those reliefs which are available to them? Okay. So, to the employees, the reliefs that are available, if in case they purchase a plant and machinery by an employed person for his or her employment. So, if in case, maybe say I want to purchase a laptop. Okay. Usually in my business, in my employment, obviously wherever I go, I will be provided with a laptop for work. Correct? I am provided with by the employer, I am provided with a laptop to work. Correct. But if the employer says no, I'm not going to provide you. So I have to purchase my own laptop. Now maybe I'm not that rich. I took a laptop on loan. Okay. So if I took a laptop on loan, whatever is the interest payment on that laptop, whatever is the interest payment on that laptop, that can be deducted as a relief. That interest expense can be deducted as a relief for the employee. Okay. For the employee, the purchase of shares in an employee controlled trading company by a full time employee. So maybe I am working in a company as a full time employee. Okay. And the company that I'm working in, that is, a company wherein the employees hold the shares of the company. Okay. So if in case I want to purchase shares in my own company where I'm working, for that purchase of shares, if I've taken a loan, the interest payments that I pay on that loan is also going to be considered as a relief, which is a qualifying relief. So mainly only these two reliefs are qualifying for an employee. Okay. For partners in a partnership business, the purchase of shares in a partnership. So obviously the business would be owned maybe by two or three partners in a 50-50 percentage, right? So they might actually want to purchase shares in the partnership firm, right? So if in case they take a loan for the purchase of those shares in the partnership firm, they can deduct it as a relief, okay, from their net income, from their total income, okay. And the purchase of plant and machinery for the use of partnership by the partner. So maybe say the partner bought a machinery or a building or something. The partner bought a machinery and he bought it on loan. He could use it in the partnership firm. Okay. In the partnership firm, he uses for the manufacturing activities of the firm probably. Okay. So he bought a machinery on loan. So whatever interest that he is paying on that loan, that is also going to be considered as a qualifying interest payment, and that can be deducted as a relief from his net income. Always remember, guys, in a partnership firm, the firm itself is different. In a partnership firm, the firm itself is a separate legal entity, not a legal entity because it is not corporate incorporated, but partnership firm is dealt with separately, and all the partners within the firm, maybe say there's partner 1, partner 2, partner 3, all the partners are considered as separate individuals and their income will be accessible separately. Okay. So always remember, if this partner has taken a loan for bringing up capital or plant and machinery within the company, and on that they are paying interest, so then in such a case it will be a qualifying interest from this partner's income for the year. Okay. And obviously it will be deducted. Okay, let us look through this scenario quickly. Emmanuel provides the following information in respect of the tax year 2021-22. He has a trading income of £26,000, right? Employment income of £29,950. And what else does he have? qualifying interest payments. So if he has qualifying interest payments, this is his total income, that is 29,950 plus 26,000, which gives him 55,950. This is his total income, right? From this total income, guys, the qualifying interest in payments are going to be directly deducted as a relief. Okay, they are going to be directly deducted as a relief of 4,000, and their taxable, their net income will thus be 51,950. Okay, this is their net income. Okay, he has also suffered a PAYE of 3620. So you have to calculate what is the income tax liability on this. So firstly, guys, he has a net income of 51,950. Now from this net income, the first thing that we subtract is our personal allowance. Okay, so 51,950 minus the personal allowance of 12,570, correct? That is nothing but 39,380, right? So this is obviously above 37,700. So for the first 37,700, he will be charged 20% tax. 37,700 into 20%, that is 7,540, correct? And on the amount above 37,700, that is 39,380 minus 37,700, which is 1680. On 1680, he'll have to pay 40% tax, correct? Which is 672, right? So his total income tax liability will be 7540 plus 672, which is going to give him a tax liability of 8212. Sorry, 8212, it is not 8212 is his total income tax liability. Now from this, he has also suffered the PAY. That means he has already paid a certain amount as he has earned. So 3620 will be deducted, and the income tax which is payable is going to be 8212 minus 3620, which is going to give him 4592, right? So this is his income tax liability that he will have to, this is the income tax payable and this is the income tax liability. Okay, I hope it is clear, guys. Okay, now for the donations that an individual has made under the gift aid scheme, there is a separate relief. So it is not directly deducted from the total income to get a net income. The relief for it is given in a separate way, that is in the form of extension of band. Extension of the band. So technically, if my band goes from 37,000 to 37,700 and from 37,701 to 1,50,000, maybe say I've given a charitable donation under the gift aid scheme of 4,000. Okay, I've paid 4,000, so the gross will be 4,000 into 100 divided by 80, because 20 is given by the government, right? 4,000 into 100 divided by 80, that is 5,000 is the gross contribution, correct? Is the gross contribution towards the gift aid scheme. So I will get a relief for it in the form of extension of band. Okay, how will I extend it? So technically, from zero income to income of 37,700, I was being charged at 20% tax, right? But now I will extend this band by 5,000. That means not till 37,700, but till 37,700 plus 5,000. That is my gross donation, which is nothing but 42,700. So till 42,700, only 20% tax will be charged. And I'll add that here also, plus 5,000. So from 42,700 to 1,55,000, I will be charged 40%. So if in case during the year my income was 40,000, if I would have not paid this donation, it would have been charged as 37,700, 20%. And above that, that is 40,000 minus 37,700 on 2,300, I would have paid 40% tax, right? But since I have made a donation, this will be reduced as, just a second, guys. Yeah. As, see, it is below 42,700, correct? My income, it is 40,000. It is below 42,700. So till 42,700, I will only be charged 20% tax directly. There will be no 40%. Okay. If in case I exceed 42,700, if in case I exceed 42,700, that means maybe my income is 45,000. So till 42,700, I will be charged 20%, and 45,000 minus 42,700 on 2,300, I will be charged 40%. So my band has increased. Now it has become 42,700 because of my gross gift aid donation. Okay. And always remember, it shall be deducted by the gross amount. Okay. I mean, it shall be extended by the gross amount, the band. Okay. I hope it is clear, guys. Now, your charitable giving, it could be in two ways. That is donation under the gift aid scheme. You are making a normal donation. Maybe you're a self-employed person or an employed person. Or you can also do it within the payroll giving under the payroll deduction scheme. So maybe I am an employee who's earning the payrolls on a monthly basis, and there is my employer. Okay. So employer has made a building as an educational hub for the poor children, giving them scholarships. Okay, the employer has made a building that is an educational hub for the poor children who need scholarships. So the employer says, if you want to contribute to charitable giving, you directly contribute here. Okay, so if the employee's salary is maybe say 45,000 pounds, from that you contribute 3,000 pounds towards this. So that means the employer will pay him only 42,000 pounds as his income, right? As the employee's employment income. That means the employer will directly deduct this 3,000 pounds, and it will be going as a charitable giving to his own run educational center. Okay. I hope, guys, this is clear. So there are two ways of doing it, but you will understand this way in detail later on. Okay. Right now we're just going to understand the first one. I mean, this one, you're going to do it in detail when you come across later chapters, that is pension. That we are not dealing with in the YouTube revision session, but obviously you can go through. It is very simple. It will give you more clarity. This part we can skip as I've already explained you. Now, the last part that we do is child benefit tax charge. Okay. Now, what is child benefit tax charge, guys, that we are supposed to understand? But before that, we'll just take a 5-minute breather break, and after that, return with the remainder of the chapter. Guys, let us continue. Okay. So the child benefit tax charge to the married couples, there is a child benefit which is given to them. It is already given to them. Okay. But if in case the married couples for who are poor, okay, to them the child benefit is given. But if in case they are married couples are having a very good income, then they can take care of their child by themselves. Correct. So on that child benefit which is given to them, they are going to charge the tax and take back all the child benefit if your income is too high. Okay. So child benefit is a tax-free payment from the government, which can be claimed in respect of the children, and it can be claimed by the low income group who are having an income which is lower than 50,000. However, a child benefit income tax charge arises, so it is a tax charge. Okay, it is not a benefit, it is a tax charge. The benefit is already given, but if your income is high enough, then you will be applicable for a tax charge on that same income or on that same benefit. Okay, an individual receives child benefit and he or she or his or her civil partner or his or her partner who is living with has adjusted net income of 50,000 pounds or more, then he'll have to be chargeable for the tax on that child benefit, right? So, child benefit tax charge, if in case your income is between 50,000 to 60,000 pounds. Firstly, if your income is 50,000 pounds or less, okay, then you do not have any tax charge on the child benefit that you've received. Okay, less than 50,000 pounds. But if it is between 50,000 pounds and 60,000 pounds, 1% of the child benefit for every 100 pounds of income over 50,000 is going to be taxed. Okay, and if it is over 60,000, the total amount of the child benefit is to be paid back in the form of tax charge. Okay, and what is that adjusted net income? Adjusted net income here is different, guys, that I'll show you all. Just a second. Yes, so firstly I'll show you all the calculation. Adjusted net income minus 50,000, that is there, it is the same. Okay, I'll show you one sum, through that you will get more clarity on this. So the adjusted net income minus 50,000 into, you can just take 1% for every 100 pounds, correct? You can take 1% of the child benefit as a tax charge for every 100 pounds. So that means technically there is just a simple formula I'll show you. We'll directly do it through a sum. Okay, just give me 1 second, guys. I forgot my calculator. Just give me 1 minute, okay? Yes, guys, I'm so sorry. Yeah. So technically, your adjusted net income, whatever is there, minus 50,000 pounds, and you will multiply it by 1, divide by 100%. Okay. Or you could just directly do it as divide by 100%. I'll just erase this also. You will get it in percentage directly. Okay. So ANI minus 50,000. That means wherever your ANI is greater than 50,000, you will get a child benefit tax charge on it and you will divide it by 100 to get the value. So let us do the sum. Through this sum, you will understand it better. Okay. Rizwan and Gisela live together with their son. Gisela received a child benefit of £1,100. Rizwan has no tax income in the tax year 2021-22. So sorry guys. Gisela runs a small nursery business. Okay. Gisela has a small nursery business and her taxable total profits is £60,000. Okay. So Gisela has a trading profit of £60,000, but obviously she has paid 2,000 under the charitable gift aid scheme, right? So under the charity gift aid scheme, she has paid £2,000. You have to calculate Gisela's income tax liability for the year. Okay. First, you have to check the tax benefit, I mean the child benefit tax charge. Her income is 60,000, but from that you will obviously deduct the 2,000 which is paid by her under the gift aid scheme, which will give her an adjusted net income of 58,000. Correct? The adjusted net income is still above 850,000. So that means you will calculate it as 58,000 minus 50,000 divided by 100%. Okay. So that will be 8,000 divided by 100. So that will give you 80%. Okay. So 80% of the child benefit is to be paid back as a tax charge. Okay. So firstly, she has a trading income of £60,000. Okay. You have to calculate what? Gisela's income tax liability you have to calculate. Okay. From this, she will deduct the personal allowance, correct? And the personal allowance is 12,570. So the remainder is her income, that is 47,430. Correct? Now, she has made a gross gift aid donation of 47,430. Sorry, of 2,000. Correct? She has made a gross gift aid donation of 2,000. So your bands will be extended by 2,000. So it should have been 0 to 37,700. But now it will be 0 to 39,700 because it has been extended. And from 39,700 to 1,52,000. Correct? Now, her total income is 47,430. Correct, guys? Her total income is 47,430. So till 39,700, she will be charged 20% tax. Right? And on the remainder of the amount, that is 47,430 minus 39,700, she will be charged tax of 40%. Right? This is her income tax liability, which is 11,032. Correct, guys? This is her income tax liability. But, guys, in her income tax liability, she also has a child benefit tax charge to be made. Right? Right? So the child benefit that she has received is 1100. You will add back 80% tax charge on it. So that will be nothing but 1100 into 80%. And obviously this is a tax charge. So this will be added to your income tax liability. And thus her total income tax liability will be 11,912. Okay. So directly like we did for our PAYE, it is eventually reduced. That same way, we are going to eventually add this child benefit tax charge because it is a tax charge on the benefit that she has enjoyed. Okay. I hope this sum is clear to you guys. And I hope that chapter 2 is clear to you. With this, our chapter 2 comes to an end except for the residency test that we will do tomorrow in the next class. Okay. So tomorrow we meet at the same time 9 a.m. to 1 p.m. where we will complete our child benefit tax charge. Where we'll complete our residency test and obviously the chapter number 3, that is investment income, and later on solve corporation tax. Okay. Thank you everyone for your time and efforts. We meet in the next class, that is same time 9 a.m. to 1 p.m.